Welcome to another war room. Shake my hand. Shake my hand. My name is Dira James Siri, head trader of 365 Trading Academy, and this is war room number 71. Getting closer and closer to 100 swing trade analysis done on a weekly basis. If you're new, check out the channel, like, share, subscribe, all that good stuff. And if you have been with me for a while, you know what we're going to do today. Same old, same old. I'm going to start off with some market sentiment, catch up with the markets, find out what happened this particular week and where markets are going. This coming week is a big week, so I encourage you to stick around for the market sentiment segment. Check out what we're doing, across the first top 5 pairs. And then there's anything else that you like, obviously down here, then stick around for that, right? But market sentiment is key. On Wednesday, got FOMC, Fed fund rate, Powell, and I'll be streaming that live as well, but then we'll get into that. So when I look at NASDAQ, S&P 500, US 30, China 50, something cooking is now starting to cook on China 50. If you've been with me since last year, you remember that I kind of took a break from China 50, man, after it broke a governing demand, just something it had not done since the beginning of that, since brokers started printing that chart. Right, so finally there seems to be some type of stability in China 50. We'll see how long that lasts. We're going to look at the dollar. Straight after that, we're going to look at gold, NZDUSD, NZD Swiss franc, NZDCAD. Right, this is quite a theme I'm picking up in the market, so please bear with me. I want to look at a couple of NZD pairs. Something might be cooking there. Then we'll look at pound CAD, Euro AUD, Euro USD. This is just our golden goose. Right, it feeds us almost every week, so we might as well just check it out. Bitcoin, then we're going to look at some exotic pairs because these pairs move similar, right? If there's a supply on the daily on one of them, find the equal supply everywhere else, right? Number one. Number two, I made a tweet about this, and prices already played out to phase one of those levels. Then we're going to look at platinum. This is strictly out of curiosity to see if I can get another good swing trade in, right? So this is what we're going to do today together. We're going to cover quite a few things, 19 assets in total to cover. Not a lot of time as usual, but I do appreciate you watching and sticking through till the end with me. And we can see if we can kind of just figure out what exactly has been going on in the markets. Right now, before I do that, I'm going to show you guys something, cool. So I was, adding some data here onto my Myfxbook. For those of you who don't know, my Myfxbook is there's a platform where you can link your live accounts in case you showcase work, right? So if I wanted to market 365 and be like, yo, check the statistics, this is a very good way to verify that kind of stuff. We like to do that for corporate clients. It is also as a very nice way of drawing reports, etc., etc. But you also get a good sense. So there are a lot of things here. I pull COT data from this website, which I'm pretty sure I've shown you guys on the channel. I test and run my bots. I back test on this particular platform. It's very packed with a lot of things. Well, what I found very interesting, and I'm going to scroll all the way down here, is the stuff that I want to do today is a little bit different. We're going to do a normal war room, but I'm just going to add a little bit. Every chance I get to teach a little bit more, to add a little bit more new information, to sharpen your edge in the market. It's absolutely important. That kind of stuff comes up and it happens right here, right? So if I can just move my notes, so I can just clear up some space, move this to screen 3. Right, so there we are. So we're on screen 1 together. Right, so so first of all, these are all real accounts, right? So we're looking at data of traders, predominantly in the retail sector, predominantly, right? It's not always that institutions would link their account to my Myfxbook. This is really more of a tool for retail traders, right? But not just any average retail traders. In my humble opinion, from what I've seen, over a period of time, the best of the best will link their accounts to my Myfxbook, or real accounts that are running bots will link, their stuff there. But it's a fair good amount of good traders in the retail faction, right? Using this thing, right? So it's a lot of real accounts. Some good profits, 63% are profitable, right? Funds won, right? And I just want you to see this because I find this quite interesting, right? Funds won, we're looking at about $2 billion US funds lost, about 1.6, right? So different traders trading different things. And according to all the real accounts linked here, including mine and everyone else around the world, this is how it's split. Current opening trades to date. I'm pretty sure this was last updated yesterday. Oh, I lied. Literally, it gets updated every 60 seconds, right? So this is quite recent, right? So on Friday, most retail traders had positions, right, in EURUSD, Pound USD, USDJPY, you know, the usual, the big liquid runners, right? And then it just gets split up into all these other pairs, right? Now, here's why I say it's not your typical retail trader data, right? The average deposit on these real accounts is about R1 million, right? So it's about 60,902 US dollars, just slightly under R1 million South African rands. And the average account that takes out profit withdraws slightly above 1-point-something million rands, about 78,000 US dollars. And the average account loss here is also just under R1 million, about 800 and something thousand rands. So some real good big money is being moved. And once again, the data is based on verified real accounts only. And that's what I like about the scammers can't bosh these numbers. That's where 365 stands apart. You cannot bosh. When we say 85% win rate, you cannot bosh these numbers, right? So when I was looking at this stuff, I was looking at the market sentiment, which is what I want to start off with today. And we'll do our usual drill of market sentiment. Our usual drill, we're going to look at some CNBC stuff. I'm going to quickly go through some headlines with you. We do this so that when we start to mark out signals, where to buy, where to sell, we are all on the same page, understanding the kind of like sentiment in the market. But I like the Forex sentiment in the community, right? So the community of the real accounts here of retail traders whose average deposit is about R1 million or 60,000 US dollars, and average take profit or withdrawals are about 78,000, about 1.2, right? These are kind of like profitable traders. I like to get a sense of what's going on with these traders, right? You see, are they long, are they short, blah, 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 blah. And that's what we're gonna do today. So I've already kind of like marked out the charts that we're gonna do. I've already kind of like taken the data, so look at AUDNZD, it'll tell you, all right? I'll just click there. In front of you, you can see about 81% of the traders are short. On AUDUSD, 62% are long, while 38% are short. And this is only 8% of the entire group, the entire community that links their accounts on Myfxbook that is trading AUDUSD. Like, data is so important for me, right? So it's not everyone in the world. 4%, read the bottom there, 4% traders currently trading EUROCAD, and out of those 4%, 81% of the 4 are long. All right, it makes sense, right? I hope it does. Right, so we're gonna do some analysis today, like we do, but we're going to have this stuff, at the back of our minds. We're going to go do it chart by chart, right? I just wanted to introduce another tool that I like to look at. And generally speaking, there's no way me saying that these people are always right. No, that's not what I'm saying. I'm saying very nice to understand your competition. Very nice. Remember, if you're buying an asset in the stock market, in Forex, Bitcoin, blah, 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 somebody's selling it to you. One of you is making the better play in Forex, in crypto, in stocks. Whoever is selling believes that the asset is maxed out. It's reached its highest price and it's now time to get out. Whoever is buying believes the opposite. They believe, actually, no, I am now buying low, despite however their strategy has helped them get to that conclusion. It could be an RSI indicator. It could be a stochastic. It could be overbought, oversold, all those useless things, right? A trader is making the decision to buy an asset because they feel like it can go up, and someone is selling because they feel like it's going to go down, right? So I like once in a while to kind of like just keep track of the broader competition, all right? And generally speaking, we like to concern ourselves with smart money. Smart money is the only money that moves the market. So why not be on the right side of smart money? All right, so before we dive into the charts and then map out all the buy and sell signals, manage some positions, talk about what's going to happen this week, let's just quickly do a sentimental sweep. All right, I'm going to take 5 minutes around this kind of thing. Europe markets closed lower after ECB meeting, right? And this was, I think, Alvin asked me a question around ECB and Europe. Alvin, I apologize. I won't be able to do it this right now today because I've already got a big video coming out tomorrow that I've already recorded on Saturday around all this kind of stuff, right? Preparing for the Fed meeting. Today, I would not want to preempt, right? US inflation shock. We're talking about CPI numbers that came out on Friday. And they were a shock. Were they a shock? No, they're not a shock. I've told you guys, January, no. I told you guys in February, I told you guys in March, I told you guys in May. I expect inflation to remain high until September. In September, I'll be looking at the CPI report of the previous month. So we're looking at August numbers, and I will only see a peak or determine if there's a peak then. Powell, FOMC, the rest of the world can tell you month after month that inflation has peaked. But what happens when CPI drops on Friday and says, actually, it hasn't peaked, it's on the rise, right? You will have to think for yourself. Number two, I've told you guys, February, March, April, May, I've been very consistent that the plan is to destroy demand. The plan is to break demand. That means assets must fall, housing crisis, the stock markets must fall, risk off sentiment must prevail. EURUSD taking a nosedive, right? And there's actually something I was wrong about in the last forum on Sunday that I quickly want to address. I don't even know if we should say I was wrong, but I think that's a good subheading for it, right? So we're gonna address what I was wrong about now, right? So the Fed will raise rates in a week ahead, but what Chair Powell says may matter the most. This is true. On Wednesday, I will be streaming the FOMC meeting live. Remember, the fund rates will drop first, okay, at 8 p.m. But at 8:30, there will be a press conference, and that is what moves the markets the most. All right, you can get a 30-minute volatile movement, but then power might increase the rate, but also calm the market. So you might get an opposing effect. So please do stream in with me this coming Wednesday for that, right? So a quick look, right? Euro is down, right, across the board. There's the Asian markets, right? A little bit better, but generally speaking down, including our Australian index that we, spoke about last week, Sunday. Pre-market for tomorrow, right? The Dow dives 800 points, S&P 500 at its worst week since January after inflation hits 48 high. Your NASDAQ futures is down, and your oil is down, but trading at a 120. Remember, we'll not be fooled by this. Down for us at 365 for oil will be under $100. I trust my audio is better today, right? Last week I was dancing with the mic. I got too excited, so now the mic is just on a standstill position. Right, USD 10-year treasury yields, I taught on this on the channel, we're now above the 3% level, all right? So red lights, recession, a high inflation. The two are not the same, but the two are equal devils, right? Right, literally, approaching the markets, from both sides, right? The U.S. economy, the actual NASDAQ markets, 11,300. So we just had a downward Russell back at about 1.8. The VIX, the fear gauge index, what did I say? When this number goes above 30, the VIX, we are back to panic. We're back to COVID scared levels. We're back to the beginning of the war. And whenever there's fear, there's market uncertainty. When there's market uncertainty, whoop, nosedive, right? So just look out for these things. Keep working every day. Get better and better as a trader. Keep the routine. Keep the regime. Keep doing the basic checks before you trade. All right, just do this. This will help you. Right. Energy is down this week, but again, look at this. Like, gas is still way high. Oil is still way high. Brent never came back to flirt with $100, right? Everything is just flying sky high, right? And then crypto, Bitcoin, right? Left the 30s again, all the way down to day 27. Ethereum under 1.5, XRP 85 cents. I mean, I love the long winter that XRP has been. It's literally one of my favorite things that I keep buying bit and bit, in massive quantities. I told someone in South Africa the other day, I asked them how much do you spend on airtime a month. They gave me some wild number. I'm never on the phone. I literally don't even have an airtime bill. My partner is on the phone, but not even that much. But anyways, they spend about 500 rands, right? kind of like not even sure how much that is in US dollars for our subscribers who are not in South Africa here. But 500 rands, I don't think it's a lot of money. I don't know. That's relative. Strike that. It could be a lot. Right. So they spend about $30 US a month on airtime. And I say every time you spend 500 rands on airtime, at the end of the month, when you're paying your cell phone contract or however you balance your books, buy XRP for the equal amount, right? Or just create a habit of dollar cost averaging. We started buying Bitcoin Cash at $320. It's literally lost half its value since then. I'm buying Bitcoin, etc., etc. And we should have a Wealth in 3 Years program, financial notes soon. Guys, I keep thinking this is it. The CPI is bad. Bitcoin's gonna fall now and crash all the way to 20K, and there's always something stupid, there to save it, right? So that's why I haven't released a note yet, because if Bitcoin falls to 20K, there are a couple of altcoins that will disappear, like completely vanish. Not like drop to like $1. I mean zero out. Those projects will get wiped out, and we'll get a streamline of good projects. And I want to see what that is before I release a financial note. I hope those of you who are in the program know the rules. Until I send you another one, we keep dollar cost averaging into what we have, right? So there's never a time where you stop investing, okay? This is a buy the dip moment, right? No matter the news, the bear crash, whatever, if you've got good projects, keep buying those dips, right? So okay, cool. Then real quick, and I have to do this before I start giving out signals. If you're new to the channel, this is a very important part. We must test the sentiment, right? We've been worried about China for a while, right? With the COVID stuff. Benjamin is experiencing a strongly explosive COVID outbreak, right? Maybe not a good time to look at China 50, but we'll see. News quick ahead. FOMC, all right, on Wednesday. Bank of England is going to have some big monetary policy meetings. Reserve Bank of Australia, Bank of China, of Japan, sorry, and some China. This is a big trading week. This is a big, very big, very confusing trading week for a lot of people. So I would absolutely encourage mindfulness. I would encourage rock solid discipline. I would encourage some rule-based following. I would encourage you not to chase volatility, but to chase the absolute pain and structure of your rule-based approach in the markets, right? So what US economy calendar looks like, we've covered that. Bank of Japan intervention. To what is the yen in a free fall or not? That is the question. We look at War Room 60 something in the channel. We looked at the index, right? This is what they're talking about here. Is the yen a free fall or not? That is the question. My take is we're going to start to see some serious built-in recovery in October. I mean, as far as I can tell, I mean, the Bank of China has been very clear about this from the get-go, that they are happy to keep this thing. Look at this, falling, right? If there's even a retracement, the hopes for a retracement where price would come up there, that was like whenever I marked up this chart. There is zero hope for that. In fact, what markets have done between closing the month of May and opening in the month of June is to create another strong supply. The more supplies you get a ladder effect, a ladder going down, and that's what's happening here. We've got a strict ladder effect to the downside for the Japanese yen. So the answer to this question, if it was asked to me, free fall for now, and you'll see. Right, FX News wrap up, another hot inflation report sends the dollar soaring. Remember, when CPI is positive, it's good for the dollar safe haven flows. I've covered that stuff there, so I won't waste your time. Major indexes had their worst week since, in January. Nasdaq tumbles 5%. That has to be a massive, big red candle. When will the Fed stop? You can read that at your own time. US crude falls 84 cents. Not important. Ethereum takes out a major level in a fall to the lowest since early 2021. And Ethereum, guys, is an asset to look out for. Ethereum doesn't have a lot of cheeky demands, and when I say cheeky, I'm talking about H4 daily, on its chart, like Bitcoin, right? When Ethereum falls, it will fall, and it will be a beautiful, very quick, rapid buy up. So be dollar cost averaging, but also creating a cash reserve, so that one day when we get to these perfect levels, you've got a big lump sum buy that you're going to hold on to for a very long time. But then the pound plunges, right? Pound JPY, I did say on the public Telegram group on Friday, I'm closing my buys, right? We have 2 big buys left on pound JPY. I'm going to show you the charts right now because it's not an asset we're looking at this week, right? Unless if you're a seller, I wasn't. I've been a swing buyer for a very long time. I had 3 big positions. Buy 1, we closed a very long time ago. And then buy 2, we held it until it bounced back. And buy 3, we closed recently, right? So there we go. Buy 1, buy 2, right? Beautiful swings on the pound JPY. It held this all the way back and then it bounced back up. And this was a good place to close buy 2 on Friday. As buy 1 again, right? And this could really be another push to the downside for a little while. We shall see, right? So in terms of market sentiment, I think we've done a good job of just catching up, you know, with the markets. I want to now kind of like really speak to what I find interesting about this week. We know that on Wednesday, which is 3 days from now, once again on Wednesday, guys, 8 p.m. 365 channel. Just subscribe right now, hit the notification button. I will be live with you. We're going to sit through the data. We're going to mark up some charts between 8 p.m. and 8:30. So when Powell comes out, right, we're going to watch markets dance. I'm going to be breaking down the jargon, breaking down, you know, what they're saying, breaking down what I think is going to happen in the markets. And we're going to be watching it live. I won't be trading live. I never trade those type of events live. Those markets will move up and down. I'm not a volatility chaser. I like the long trade. So I know what Powell's going to say this Wednesday is going to map up some beautiful trade ideas I can use for the next 3 to 4 weeks and find safe entries right into those things, because the goal is to make money, not to lose it, right? So, but I've been here with you guys in a couple of war rooms, and I really hope to watch the war rooms and you remember the stuff I show you. If you remember correctly, there was literally 1 or 2% of people who believed that Powell would give us a 50 basis point this Wednesday. All right, 99% or something weird like that in the there's the previous week. There's the previous week. What am I doing? There it is, written there. 98% believe we were going to be getting about a 25 basis point this coming Wednesday. And look at how things have changed over time, right? Look at how things have changed over time. Last week, only almost 2% of the market believe we're going to get a 50 basis point. Remember, the rate is at 1% right now. So 50 basis, 0.50 is what we're expecting. And now that number has jumped to 23%. And the reason for that is because CPI on Friday went up. CPI actually literally popped a bubble in the markets. They literally said, you guys thought inflation peaked because of some data you got last month. Well, look at the latest, right? And I've got a couple of graphs here, you know, that I want to open quickly before we jump into some charts. If you're still around, don't forget to like the video. As the moment I say something you like, just like that video, man. I'll thoroughly appreciate it. Let me move us to screen number 3. All right, so check this out. This is literally a CPI 12-month percent change consumer price index. I'm sure you guys can see it clearly. I repeat, if you can't see it clearly, do let me know. But I'm sharing screen. I'm gonna move to screen 3, right? So it's clear as day, right? So this is CPI data. This is your CPI data, 12-month over change. And then I really decided to give you guys a good long-term view. Does it look like this thing is peaking? No, the answer is no. It's not even a trick question, right? This is not peaking anytime soon. And if it is, right, it's not peaking right now, right? So the data that we're given is correct. The reason why markets get freaked out is when the experts, right, on Forex Factory or wherever you put your data, Bloomberg, it doesn't really matter. When the experts come up with the forecast, and I think I've explained this before, it's not so much that we should be worried about bad information or these guys even know what they're doing. What we should be worried about is the fact that the so-called experts, the so-called gurus, the so-called economists, the so-called smart money guys, the guys in smart money are not getting the forecast right. They are absolutely failing at getting the forecast right. And that is absolutely worrying. Okay, that is absolutely worrying. So let's go to Friday. All right, so on Friday, the forecast was because of the decline, and you just open the whole thing. Let's open the whole thing. So previously, the month before, or the data that we got in the previous month, which would have been May, was, well, this thing is literally came in about 0.3%, and the forecast was 0.2. All right, and then they anticipated that it would go up to at least about 0.7%. That was their focus, but it came in hotter at a full 1%. Now, this CPI looks at the change of price in everything, all right? Change of price in everything. And so economists like to say, okay, fine, we get it, but let's look at the one where we can strip things. They call it the core. When you strip things, you remove highly inflationary things like gas, energy, and food. Your cooking oil, just remove that stuff so that it doesn't influence the data. Let's see if normal things that are not so sensitive to inflation are going up. So that's what the core is. And the core is a big deal. If you look last month, the expectation was 4%. It went up to 0.6. Sorry, 0.4, it went up to 0.6. And then they thought, fine, this month it will go up to 0.5. It's still at 0.6. And remember, this is the core. The core excludes food and energy. All right, so it's actually quite worrying when you see pictures, and let me just show you what it looks like. And we know why. We know oil is up. We know all these things, right? So this is the second picture I'm going to show you. Then we're going to keep it moving, right? So look at energy, a massive contributor. Food, slightly higher. All other items, and then all items less food and energy, right? So this is a big issue, right? Inflation problems have not gone anywhere, and I don't think they're going to go anywhere anytime soon. Recession is here because of these exacerbating issues that continuing, and all we need now is 2 terrible job numbers. I could talk to you about recession. I could talk to you about we're waiting for another GDP reading, which I'll talk to you more about at the end of June when I get all that data. But once we get 2 bad financial quarters in the markets, you don't need me or anyone else in the world to tell you that we're in recession. Remember, we need 2 financial quarters. There is no number, doesn't have to be negative 2%. As long as both financial quarters back to back are in the negative, GDP wise, recession has started. And our numbers for the first financial quarter were bad. The second financial quarter is 3 months, banks think in 3 months, take property in a 10-year plan. The second quarter is bad, problems. Now, because CPI went up, your indices fell. NASDAQ fell, US30, SP 500, because remember, it's not just about inflation is going up. It's inflation is going up, and what is Powell going to do about it? If Powell sees inflation continuously going up, Powell's going to have to increase the rates. So it's not going to go 0.25. Powell's going to go 0.5. So it's going to give us a 50 basis point or even more. That's fear. For the stock market, for demand, demand means buy. For things that you buy, your assets, your NASDAQ, US 200, etc. That is a terrible thing, because now markets now need to price in that movement now. All right, so that's what we saw on Friday. So when they say, markets close bad and NASDAQ, S&P 500 had their worst day since January this year, right? It's absolutely not a joke. Believe them, there was a lot of blood on the streets. And before now, and as I'm about to start kind of like mapping out the signals of the day, I quickly want to correct, I think is the right word, but not really. But yeah, let's correct something that I said last week. Last week and the week before, I started to drink the optimism juice. Right, it seemed to me like I started to drink the optimism juice, and I was completely unaware of myself doing that. Right, I kept saying to you guys, it would be very possible for the markets to give us a bull run of March 14 this year, 15 of March, which was a 2-week bull run before a massive sell-off, right? You literally have me saying that kind of stuff. And I used the S&P 500, I put in a ghost feed, and the ghost feed looks something like this, right? So we just kind of like looked at how markets move from there to there, I think, right? What's going on? Something like that. And then, let's just pull it a day somewhere there. And then we wanted to see if we're the similar trajectory from here, which was last week. and that would mean markets were going to break out another 2-week bull run and potentially sell there. I was always and have been for the longest of time very bearish on equities, right? And then I was simply hoping to get a higher sell point. Number one. Number two, my trading strategy, ladies and gentlemen, does not allow me to take lightly areas of value where price has revisited already. So at 365, we like to prioritize fresh areas of value. And so when markets came up to this level, a level that they had already spent a lot of time in. Remember, I did this 2 weeks ago, bearish engulfment test, bearish engulfment break, bearish engulfment run. And if you look at this green candlestick and you look at the wick of this green candlestick, which is what we like to call our area of competition, it already looked like markets had arrived. Now, I did not believe, and I should have stuck to my thesis, but I didn't. I didn't even believe that there was going to be more sell pressure already here. In fact, a big part of me felt like that 2-week bull, at least 2 week to a week and a half, would continue. And then markets would get somewhere here by the time Powell comes in on Wednesday, and we'll be selling from there. All right. But then CPI data came through. NFP the previous week wasted time as the markets kind of like just consolidated. Then Friday the data came, job numbers were strong, the dollar ran, equities kind of like just shifted a little bit, and then here comes now CPI data, which just threw the NASDAQ, S&P 500, US 30, the whole shebang, like through the loop, right? And now markets are tanking, back to our regular programming. What's our regular programming? Forget about all-time highs for a very long time this year. Let's talk all-time highs in the third financial quarter. We are about to enter summer markets. Summer markets are notorious for being thin. Somebody asked me to do a video explaining conditions around markets in different seasons. It's on my diary. It's going to get done. All right. But summer markets are just notorious for being thin liquid markets because the rumor is all your billionaire hedge funds, your fund managers are on holiday, right? So there's not a lot of risk appetite onto the markets. You add that, you had inflation, you had recession, you had all these problems. Forget about all-time highs, right? Forget about constantly buying NASDAQ at 3:30 p.m. Right. So I think I feel done. I feel like I've done a good recap. So for the next hour, I'm just going to be mapping out some buy and sell signals and seeing what's cooking here. What's cooking within the markets. I've already told you the type of assets that I want to look into, and I'm just going to go through them in this particular order, right? NASDAQ, blah, 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 up until the end. And normally by Monday, 24 hours after the release of the war room, there'll be chapters added, for each asset. All right. So if you don't mind, let's get into that. So let's start off with NASDAQ. Now that we know what we know about the sentiment, we know that the war is still going on. We know that inflation fears are in. We know that this is not going to be a normal pricing of things. There's going to be a price of fear into the markets, right? Markets are going to price in the worst. And the worst thing that could happen is for Powell to go 50 basis point or even 1 full point. Now, 1 full point is unlikely. I think Powell is simply going to do what he said he was going to do the last time he did this. And he said, we're going to do about 1, 2, 3, 50 basis points. All right. So that included March and June and another one in July. And then from there, we shall see. And I think I've been kind of like fair on repeating this particular statement. Right. So I'm on the NASDAQ here. And I just want to bring to your attention, number one, that NASDAQ is knocking on heaven or hell's door. This yellow box that I'm drawing in front of you is a dangerous place for an asset to be. This is breaching where we officially reach bear territory. And you'll see, like the commentary is, we almost tiptoed, we survived. They're lying to you. They're absolutely lying to you. They say this to come up with, if we go through COT data for NASDAQ, Uncle EG, if you're watching this, please let me know in the comment section. Uncle EG, if you're watching this, I saw your comment. Want a video on COT? I got you. I will look at COT data this week. I'll do a private video for that, just around that stuff. And I'm going to show you how they keep building big. I'm telling you guys, massive sell positions that they're going to offload soon enough. But the headlines are, we tiptoed, we survived bear market, the SPY didn't close, S&P 500 didn't close, below 20%. And that's this yellow circle, this white line here marks that proximal line of a weekly demand, but also we're far past, far past the 20% mark on the NASDAQ 100. And this area, this weekly demand, has been tested now multiple times. So just bear that in mind if you've done my course. We all know what that means, right? Class effect is coming in, they're going to break that area of value shortly, right? Wherever I stop, that's 20%, right? So the last time NASDAQ was above 20% was literally just above this 1 hour demand. I'll repeat that again. The last time NASDAQ was trading above 20% from its all-time high, 20% marking a bear crash, a full-blown bear crash, was slightly around this 1 hour demand that we had marked out here a while back, right? So somewhere in here at these levels marks the crossing, so to speak, of bear territory, which puts NASDAQ, the border of NASDAQ to bear territory at about 12,200, right? So somewhere if you go to the 1 hour time frame, there's a demand that's obviously now been broken, completely smoked, all right? But in there was the last line of defense of bear territory. We've gone back to that. We've gone back to below the bear. And to me, this chart is telling a story. Now, if I was to take a trade, I wouldn't be able to just jump right in on Monday. We would have to start to plot a place to wait, right? We need markets to gain some relief. Number one, which is to either retrace so that we can find it waiting for us somewhere safe. I will always like to wait, or we want to make sure we understand the momentum and then see if we can get a lower but high risk type of trade, right? So when I'm looking at, this thing here, it is telling me to wait, right? And what that means is Monday needs to be another bad day for the NASDAQ on the daily time frame. And if Monday is another bad day, then we can start to slowly but surely think about, hypothetically speaking, price getting up here one day. Don't know when that day will be. Maybe Wednesday, maybe after, maybe before. We don't know, right? And then trying to start to look for some sell positions inside this area of value. That's what I would do. I would not be looking for any type of buys right now. Personally, I think we are done buying this asset up until I hear what Powell has to say. Because what Powell has to say is literally what is going to carry the most weight in the markets. Market structure will bend towards that, right? But for right now, my long-term thesis is we are down and out on all equities. So NASDAQ, same story. S&P 500. We can just quickly go there. Hope you guys are doing well, by the way. How's your trading going? Let me know in the comment section, man. How's your trade going? Timothy, there's someone called Timothy. I don't even know if he's watching. I appreciate your comment on one of my Facebook pages. Timothy said he hasn't joined the academy. He's planning to join the academy. But already all the free stuff, the war rooms, the posts are already helping his trading get better. And that's absolutely encouraging. Thank you so much for that comment. For me, it means there's a light at the end of the tunnel. It means, what we're doing works. Right, so same setup, same thing, right? A big cluster right here on the daily time frame, right? For me, not sure if markets will actually come here and hold, right? It's not the best glass effect. I do understand that markets literally left only once, but this for me with this continuous takeout of supplies before markets drop was not the most attractive idea, but nonetheless, area of competition achieved, markets that tanked just like NASDAQ. And I'm saying to you, it'll be nice if Monday we get a nice red candle, some type of commitment, and then we can start to consider, markets coming back to a higher point and selling there. All right, that's the S&P 500, and I promise you the same is going to be, said for US 30. So I'm feeling a bit, I don't even know what the word, just drained. So I feel a bit drained. I've been overworking. I took sabbatical to get my module 3 and all that kind of stuff up, but then a lot of things caught up with me. This has been absolutely wild, right? You can imagine this is the exact same setup we have here on US30, just like we just showed you at S&P 500, literally the same, right? Same thing, right? So, but for S&P 500 and US30, this area here is the 20%. This is the place where markets get a crash. This is the place where they say, yes, markets made contact, but closed above. So we survive, right? I'm telling you that this week will create a new type of pain. Now, if power goes 50% basis point this Wednesday and says, look, it's not, didn't peak, inflation is not transitory, or we're screwed, or you know, say stuff that implies that these interest rates will continue as long as they need them, etc., the stock market is bound to keep falling. It's ladies, shake my hand, ladies. Thank you. Ladies actually made me, and I'm talking about the stock market. Just remember, in the senior traders room this week, we made good money. Thank you, ladies. Thank you, ladies. And what am I talking about? I'm talking about Revlon. Let me quickly show you this thing. And people wondering what's going to do this stuff. Look, man, this is literally it. Like these clusters make sense. Look at Revlon. It's been a long time since I was able to sell a stock almost all the way down to zero. Ladies, are we not buying makeup anymore? What's going on? I asked my partner, you know, are you using Revlon? She's like, no, she showed me what she was using. She buys it at Clicks. We're in a small town in Grahamstown. But look, man, Revlon got onto my radar fundamentally because they're fighting for bankruptcy, or they're avoiding fighting for bankruptcy, right? I was like, okay, all right. You see, there we go. 2 days ago, cosmetic maker Revlon nears bankrupt filing. It's not the first time, right? If you do your homework with stocks, you got to do your homework. That's why it's reserved for senior traders. But there's every day there's just money somewhere to be made, right? But basically, they went through the same situation in 2020 COVID. Revlon almost shut down across the globe, right, fighting for bankruptcy. And this fear sent investors in shatters, selling their shares left, right, and center. And so we took beautiful trades on this thing and we just sold it. But the thing is, where's it going, right? There is no major turning point. It's already surpassed the last previous demand, right? And for me, you see this area there, it shows you, I couldn't even find a place to lock profits on Friday. Look at this. There's nothing to lock profits. I had to literally search for a supply, nothing on the 1 hour to lock profits. From sitting all the way up there, still nothing. I had to find a 15-minute supply, excuse me, on this particular chart. My very first, you know, main supply, and just above this yellow line, I locked profits from all these 2 daily sales that we're doing, right? So big companies are now starting to file for bankruptcy. Big companies are starting to suffocate. You have to think about it. Check this out. This is the equation. Inflation going crazy. You saw, right? NFP, right? Still looking good. Looking good. People are working. If people are working, wages need to go up. Why? Because inflation is going up. You know, prices are going up. Therefore, we saw with NFP data, an ADP report, small businesses are going to keep closing because they're struggling to compete with the businesses who are employing a lot of the people. But if wages start to go up, we get a wage price spiral while inflation is going up, while prices are going up, while small businesses are going down. When small businesses start to all tsunami down, we're going to start to see a terrible NFP reading. Unemployment is going to start to go up, all right, while prices and inflation is up. It's a messed up situation. But the problem now is when big companies like Revlon start to file for bankruptcy, start to close, all right? All of a sudden, that starts to communicate another fear in the market. If they can't make it, we're screwed, right? So if the big firms start to drop, I keep telling you guys, your index that you want is the small to medium cap companies, right? Especially if you don't really understand the purpose of NASDAQ. I know some of you just love to trade it, but you have to check out these sensitive, mid caps, because the Russell 2000 is a very good example of this. If this is not doing very well, it is letting you know. It's literally, you saw how on the daily time frame NASDAQ 100 fell. You saw how, and we marked this out, right? I told you, go through the war room. I drew this for you. I said, when markets get here, I'm gonna sell. I drew this for you. It's in the war rooms. There's a war room that was specifically for indices. I got my trading journal here. I got my trading journal here. I got my trading journal here. Give me a second. Give me a second. War room number 65. Go to war room number 65, the 6th chapter, Russell 2000. It's already been ticked, right? War room number 65 or 64. What's going on here? Oh, sorry. War room number 64. War room number 64. It's already ticked. Pending order triggered. I told you about this, right? This is important. These sensitive small caps really, to me, tell me before the big mega caps feel it. But if Revlon is fighting for bankruptcy, which is a fun stock to trade. By the way, if you want to ever trade, there's a link in the description box. I use Interactive Brokers. Use my link. You get a couple of kind of like starting an account, right? Average trade for me is good for trading across the board, commodities, Forex, a little bit of crypto, a little bit of stocks. But if you really want to get like all the stocks, and you really want to do call options, put options, just plainly trade stock by supply and demand, I love using Interactive Brokers. So check that out. But yeah, Russell's tanking, right? Literally on point. But the nice thing about it is look at the sell pressure on the daily. This is the kind of like stuff that you won't see on a big cap like NASDAQ 100. On NASDAQ 100, we just saw one big red candle. On Russell 2000, there's a gap. On the daily, gaps are already important. But a gap on the daily, gaps, you find them on the 1 hour, 15 minutes. But on the daily, that's a big deal. That's a lot of sell pressure. And that is communicating more downside. So if it's not yet clear to you, I'm a bear in this market. I'm a bear in crypto. I'm a bear in stocks. I'm going to be looking for myself. I'm going to keep selling. All right. Now, I move on. Right. So I showed you S&P 500. I showed you US 30. I've shown you NASDAQ. Right. So now I want to quickly, I'm just going to put here Revlon. Sorry, just so I never forget. Now let's look at China 50. That's our next asset for the day. I think it's CN50. And I haven't traded this asset in a very long time. I told my private students sometime last year when the market started to break demand, it's like, what is going on? So any zone that you see marked up on this chart, don't assume I'm in it, right? It was just a marked up zone. I am not in anything right now in China 50, but I'd absolutely love to be in some stuff. Right, so China 50 is obviously the Chinese index, top 50 companies, however you see it. The majority of people who run this thing, own this thing, are actually in the government, right? China has more millionaires and billionaires in parliament. So when they crush their own wealth, when they crush demand, it's not for fun. They are plotting a buy low moment one day, right? I think this is the demand that surprised me, and one of the main reasons why I stopped trading this thing. Somewhere here, right, was the first time, sometime last year July, where this thing literally 4 or 5 days just after I bragged about the consistency. There'd never been a governing demand on this chart that was violated, right? Literally 4 or 5 days later, I just got public to say something like that. For the first time ever, you can't, sometimes these things you just can't predict, right? Markets came and broke the demand, period, supply just kept falling. This was, of course, during the height of the Chinese government crackdown against tech companies in China, against the CEO Alibaba, against those teach in English companies, against some gaming companies. They literally just destroyed, a lot of big capitalist companies, literally just kept pinging them, to the ground. And it seems to me that, there's some type of revival here going on this particular asset, some type of very good demand with some strong imbalance. And the only downside to this demand is on the other side of the trend line, right? So, no matter how you trust it, it won't hold for long, right? So my opinion is, looks like China 50 is up for a couple of days to weeks, all right? Making its way all the way up there, all right? So a couple of weeks into a couple of months, give or take. So that'll be quite interesting to see where price goes from this particular area. All right. So for now, in the short term, you're probably looking for some buys because you want to get to that supply. And let's see if we can find any. Let's see if we can find any. Any buys we find on China 50 are high risk. Any buys we find on China 50 are absolutely high risk. Right. There's a cleared weekly supply here. There you go. I'm not even concerned about anything on the other side of this trend line, to be honest with you. I could not be bothered. I apologize for my voice. I can tell it's breaking, and that's maybe why I'm low energy. All right, maybe there's another fever from the kiddies in the house. Who knows, man? Kids in school. Goodness gracious, right? But I feel okay to work. I'm just saying. I can tell I've got a sore throat, and I've only been talking for an hour, right? So we've got some breakup structure here, some significant breakup structure, and I apologize. My Rottweiler has just been annoyed by the presence of other dogs, right? So you know, markets could go up a little bit in China 50. I would definitely weigh this governing supply here. I would definitely make sure I don't buy above that level blindly right now. On our daily time frame, which will then give us more. I don't know what. I don't know. I'm so clueless. Could have been a network break. I apologize for that. Hope you're still around. Yeah. So an hour in, you know. Yeah. All right. Cool. So I was saying we're still looking at China 50. You know, before the weird 30 or so second interruption. Right. I trust you guys are still boogie woogie with me. Can't control the metrics, man. Right. So you know, for me, this looks like a clean you know, road to the upside. I like I said, if I'm to buy this asset, I wouldn't bother swinging above the yellow zone here. To me, it's just not safe. We don't really know, you know, how far this will go. In fact, someone could even say Leroy would price even go up, you know, beyond there, because this could be a trend line touch. But remember, for us to get a trend line touch that we truly trust, it must be confirming some type of supply. All right, and so that's what might happen, right? Now, if you're to try and enter the markets here, you'd have a very poor risk to reward ratio, absolutely poor one, and that could really work against you. So you constantly want to map that out correctly, right? I'm noticing that now Manitrick is actually thoroughly slowed down. I did get a message yesterday that they were doing some fiber updates in our area, and yesterday with poor internet, I was hoping that they'll be done with them. Right, so your best bet is to let price go wherever it wants to go, and then hope that it will come back for you there, and that would be the play. All right, it's a very risky play, I must say. Full disclaimer: this is a very risky play. I do not think we've already left the buy lows. All right, I'm just looking at this today because it's been a while since I looked at, you know, China 50. Not that I've got pressure to trade it, but just to start to keep up to date with price. Right, so clearly inside here is a bullish engulfing pattern. Excuse me, right, this one over here. And the problem with it is, you know, it looks like it was tapped and broken, right? Completely exhausted. And you know, in my experience, guys, this is generally speaking always a terrible trading setup. All right, a terrible trading setup. Yeah, sure. Akine actually can only just show you 1365 candle, and you think everything's fine, but just factor and weigh in the risk. Right, go in very little or very carefully. But this could be a very good place to bounce. The price actually starts to rally. I would like to see some glass effect here, so some strong touch into this daily supply first. Right, very good imbalance to the left side. You know, someone might actually even try and sell here. In fact, I would be more confident in selling China 50 right now, despite the trend line structure, than buying it, right? So someone might decide to sell right there, and then push price back all the way up, you know, to some supply up there. All right, so that's my general indication of China 50. I would like to bring it back into rotation, so we keep looking at it. Right, now let's get my favorite asset in the whole wide world, the dollar. Next. Right, so we spoke about the dollar in the public telegram group. The dollar arrived outside a daily supply, perfect setup, too good to be true. We spoke about it a lot. I explained to people that, you know, when there's a data that drops at say 2:30 p.m., which was CPI on Friday, and the dollar was there the night before, just always consider what that means, like, because you've got a whole session which was the London session in the morning and the Asian session the night before, that was going to happen through and through before markets actually drop, their CPI data, right? So that's always kind of like a trap to create liquidity. And lo and behold, a beautiful, valid daily supply was taken out. Literally no care in the world. Markets just literally went through it. And didn't even give any type of relief selling, right? Markets just continually dropped, not dropped, actually just rallied to the upside, right? And that's fascinating to me, right? So on the H4 time frame, this is what we have. We've got the daily supply taken out, we've got markets running into other areas of value, other types of smaller supplies, but it doesn't look like this is going to stop them, right? Markets are just going to keep moving and moving and moving. And the DXY, by the way, did not complete its fall. Okay, right? Remember, I was hoping to buy it down there. Now, in hindsight, a lot of Fibonacci, right? You can see why markets found that golden ratio and it took off. Okay, it's literally that simple, right? Banks believe, look, man, we reduced. We're moving up, and now we've given a 61.8% discount. It's now time to sell, and that's it, right? Sorry, time to buy in this case. I apologize. And that was it. Markets did that, got to 0.618, which we know about, and they just bought like crazy. CPI then came out, NFP came out. There were multiple data points this week from Friday, the previous week, to Friday this past week, right? 7 days that have done nothing but strengthen the dollar. NFP was positive, and now CPI is very positive, right? So the dollar is now making its way all the way back up, and we shall now wait and see. There's going to be a chart to look out for on Wednesday. So I will hold back giving a trade idea right now. In the event I can give you one on Wednesday, an hour before CPI, or even after CPI, when we now really know what the plan is, right? But you can see here, all these supplies are being met with violent buying force, very violent buying force, right? So that's the why. Next one, gold. Gold, 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 right? So, then Timothy asked me, what's the relationship between gold and something? Gold and the dollar. I'll double check in the background what the question was so I can address it right now with everybody here, all right? But yeah, let's look at gold, guys, from a top-down perspective. So we know dollar is strong, and we know why dollar is strong. We can see the things that have been going on. Friday, the previous week, NFP, dollar is strong. Dollar already was in an upward trajectory. Dollar is strong. CPI is high. Dollar is strong. Inflation fears call for safe haven flows. Dollar is strong. Because as an index, oh no, the question is gold and DAX. DAX is Timothy, DAX is the Germany index, right? DAX is GR30. That's DAX. That's the DAX. That's what you wrote there, sir. Just double check if you meant gold and DAX before I answer. I thought you meant gold and DXY. You can talk to both. All right. So whenever dollar is strong, right? Imagine this: investors have to make up their minds. They have to be like, okay, fine. Where are we putting our money? Are we putting our money in which safe haven? All right. So most of the time, because of that, gold and dollar have an inverse correlation. When gold goes up, normally dollar goes down. When dollar goes up, gold goes down, right? They oppose each other. They don't move normally in the same direction, right? And I've been talking to you guys slowly but surely about this. Be careful about gold, careful about gold, careful about gold. I am much more of a seller in this market right now in these conditions, even though actually the opposite is true. Most of the time we're supposed to be very bullish on gold during tough times in the markets, but I'm actually very much keen to sell gold, right? So what's the 69% short? 69% short is just to show you the thing I introduced to you guys earlier on. Remember, we're looking at this community of sensible retail traders. This is all traders from all walks of life, different trading strategies. But this is, I think, the top 5% of our lousy 90% in the retail trade community. These are big retail traders, are career traders, people who trade for a living, not people who playing around with 0.01 lot size. And I'm not saying to trade for a living you must use a big lot size. I'm saying these people have got a process, they've grown their accounts, they're at risk. When you see people, when you see me use a standard lot size, bear in mind I've done the maths for my account and done risk management, which means my account can handle that lot size. All right. If your account can handle the lot size, stick to your lane. So I'll quickly just show you here. So you're gonna see all my charts are gonna have something like this moving forward today. In today's war room, rather, I want to show you where I got the information from, so that we can compare supply and demand analysis to the thinking of some of these traders. Some of it is good, some of it might not be good, right? So I'm going to quickly scroll down. Sometimes there we go. So there's gold, right? XAUUSD. I'm just going to click on the bar. Boom, 61%. All right, you can see there's 61% are short, 39% are long. Why do I have 69%? No, yeah, 61%. Even in my diaries, it is 61%. So what did I write on the charts? Oh, on the charts, I made a mistake. So I wrote 69, right? It's supposed to be 61%. Right. So the point here is the majority of traders, right, are looking to sell gold, right? Technically speaking. But, we're looking at a very fixed community here. 18% of traders are currently trading gold. And out of those 18%, if you look very clearly in here, you've got over 4,000 lot sizes on the sell side and just under 3,000 lot sizes on the long side, right? About 19,000, sell positions versus 16,000, buy positions, right? We can, have another look at a contrarian indicator. I'm showing you guys this time and time again. Client sentiment. Oh, look at this. Don't forget, link down below to join us. If you want to join our classes, just, click link down below and we'll teach you everything about supply and demand. Right, I'm just going to quickly go through the contrarian indicator. And gold is normally at the bottom right. Is it still reading? Is it still reading? Right, so currently for this is mixed, but there you go, 61%. So there's a whole different side. Also looking at research and market sentiment, and it's also saying 61% traders on one side, right? But right now on the contrarian side, they don't recommend trading this thing. They say it's a bit mixed. I just want to see where their 61 is. 61% on this side of the data that they have are actually long, right? Therefore, the contrarian indicator to go against the crowd, right? To sell, right? It's a confusing one, but basically both pointing to sells, but in reverse. Right. I hope that's clear. If it's not clear, let me know in the comment section. Right. So this is quite a fascinating thing. Now, when gold is going down, dollar normally is going up, which is kind of like the case right now. Now let's look at gold, respectively, from a governing profile. Because normally I feel like in these war rooms, I rush through them. Right. So the first time we looked at gold, a couple of war rooms back, I drew this red arrow, and the move was completed last month. My move was up there. There were a couple of swings there. I said, don't buy, risky, blah, blah, blah. And then all the way down here. And even down here, I didn't trust the buy, so I didn't take it. And yeah, maybe I should regret it, because you can see at the end of the month of May, there was a hidden demand that was created, and markets in June are still kind of like green on gold, right? I'm still kind of bearish, right? But in my humble opinion, medium to long term when it comes to gold, this is what I'm looking at. In my humble opinion, medium to long term, when it comes to gold, come on, don't waste my time, there we go. When it comes to gold, medium to long term, this is what I'm looking at, right? I'm expecting a movement like this between now and the end of the year. So medium term is several weeks to several months. And this is what I expect to see. So once I have that type of a bias when I'm looking at structure, I start to look for it. Leroy, why is that bias there? Well, I don't see the point of gold right now if the safe haven of choice is the dollar, and it has been for over a year. Number one. Number two, Bitcoin and crypto are fading as inflation hits at the moment, right? So the whole thing is like a weird respect. Number two, gold, after creating these highs in the 2000s, if I remove this arrow, you will notice that it actually ended those highs with a bearish engulfing pattern. That's my gut now talking to me saying it's coming down. came back to make contact with the governing demand. But look at how deep it dug, right? It's not a simple case of markets just stopped here like that, where this thing, but there's a whole week which accounts for a lot of daily H4, H1 candlesticks where markets really had to negotiate with the best price to do that. Every time price does that historically, markets will come back and remove that demand normally. All right, markets will come back and remove that demand. I'm just going to leave this here for now. I'm sorry, my chart is a little bit of a mess, but I don't want to forget this more importantly, because war rooms are weekly. We want to have a reference of what we're doing to prove week after week that it works, right? So on the weekly time frame, when I look at gold, I can see that strong upward reaction. This is actually definitely a PCP, all right, to the upside, a PCP, a potential continuing pattern, and that's incredible, right? You know, the charts are arguing that gold could rally all the way up there, and the only way that will be possible if the dollar is about to get to a supply. The only way gold could rally to the upside if the dollar is about to make contact again with the strong supply and you know, make its way down. This is right. So DXY has already arrived. Let me remove the Fibonacci so there's less noise on the charts. The dollar has already arrived at a weekly bearish engulfing pattern. The dollar has already arrived here. The dollar could sell off, guys, with no notice. This could be it, right? This is a higher supply. Any daily supplies in confluence with this weekly supply, we could start to see something like this, which would be very cool, right? Because remember, I would love to see the dollar down there. I just don't know if it's possible. I really don't. With the Fed this Wednesday, with interest rates, you know, potentially going up again, right? You know, that could feed some dollar. And if it does feed the dollar this week, this weekly supply could be taken out into a governing supply. That I believe will work. That I believe will hold, right? So and if you look at gold, gold is at a PCP stage right now, preparing for a long upward movement. And so we maybe need another week or two of some dollar strength into this yellow zone. I'll show you what the yellow zone is on the governing time frame. Remove my green arrow out of the way. You see that there? Look at this. We've got a bullish engulfing pattern on the governing chart here on the dollar, and we just removed the the Trump supply. But this is where the dollar seems to be in a rush to go. This yellow zone here marks this whole supply block that's currently fresh, very old, from the year 2000, right? Long time ago. All right, and that's the supply that price is about to make contact with, or is trying to make contact with very soon. Right, so my humble opinion is right now, I'm not trading gold up until gold gives me a clear sell signal. I'm in no interest to buy gold. Right, because right now my dollar is kind of like set up in a very bullish way. My dollar right now, fundamentally, sentimentally, is set up in a way that only gains to be made if you buy it. And so even if gold does go up a little bit, I'm not taking the bait for a while, all right, for a short while, right? So this is what we have on the weekly time frame. There is a lot of room to climb. I do believe in that. I can see it. I agree with you. I would caution a use of a bearish Fibonacci, right? Because remember, price doesn't always have to climb all the way up. So instead of coming back all the way to this weekly supply, markets could stop somewhere here. Why? Because then markets will be like, that's a good enough retracement. Right, 50% is a good enough retracement. The golden ratio is a good enough retracement. Now it's time to continue the sell, because this retracement would indicate a higher sell. Better to sell up here than to sell down there, right? So that's why I'm saying, if you're buying gold, be dead sure you are paying attention to your supplies from H4 to daily. Do not cross this road blind, because there'll be traders on the other side looking to sell. You already saw here, 61% of traders are looking to sell, right? I don't know whether they're selling too early right now. My opinion is a little bit too early, but somewhere in this blockade here, that golden ratio mark is here. There's the yellow. This is the 50% mark on the Fibonacci. So this area of value here, if this area breaks, then you're looking for a good run to this level, right? So I will have pending orders here on gold, all right? And I'll have a tester here, which I think is already used of both, right? And you can see, right, that the PCP level, the consolidation on the daily time frame, right, which indicates again that there's still a little bit of more upside left to run. It could be up to there. This could break. It definitely could be up to there, and then we get a fall. All right. I won't be in the bias, not that desperate to trade gold, but that's what we're looking at right now. Right, next chart, NZDUSD. I did tell you guys earlier on that NZDUSD is something I'm excited to look into this week. I could not resist the obvious plays on price here. So this is the daily time frame. We've clearly seen this chart a couple of times before, marked that demand a few times before. So I'm just going to clear a couple of things for us. Number one, I'm going to remove the Fibonacci, and if we need a Fibonacci, we're going to draw a new one for ourselves. Because right now this chart is just a big mess, big mess, right? So this is what the chart looks like, right? 76% of traders here, and here are long. 76% of traders. I'm just gonna. I'll show you one more. Just show you that I'm not making it up, right? There we go. So 76% traders are long. 5% of traders in the community are currently trading NZDUSD. I mean, we've got about 1,000, almost 1,400 lot sizes trying to buy NZDUSD, and only about 450-ish running up lot sizes trying to sell it, right? There's a bullish market there. Let's come here real quick. This is the last time we'll come to the site, because if I keep doing this for every asset, it's going to slow us down on time, all right? And otherwise, I'm only going to do like 5 assets and be here together for about 2 hours, right? On the contrarian indicator, NZDUSD is a little bit mixed. They've got about 58% of their traders looking to go long, and 42% of their traders currently looking to sell. So it's not really a strong contrarian indicator. Contrarian means do the opposite. You can see it's not listed here as trading opportunities, right? So these type of traders would wait. Here, 76 are trying to kind of like buy. What are we going to be doing as 365? We'll have a look at this chart, because I'm bringing this up not to say follow them. I am saying understand what they see on the charts, but see what we see what smart money sees, see the flow of money, because these guys could become your customers. Remember, in trading, if you're buying, someone is selling, and if you're selling, someone is buying. You're always looking for a customer, someone has money to come into your account, right? So we know that a lot of people are trying to pull a bottom, all right? Their indicators, their strategies, all sorts of things are trying to tell them to pull a bottom. When we look at our governing time frame, what do we have? Well, let's think logically. Number one, strong dollar. Dollar is going up. NZDUSD. Dollar is going up. NZD is going to keep falling. Or look at this. Since the 16th of June last year, that's when the dollar bull was really started, right? In June. There we go. See, bearish engulfing pattern, bearish engulfing pattern, bearish engulfing pattern. Strong dollar means weak NZD. Basic math. And I'm saying, look, man, the NZD is going to run a little bit more, the dollar to the upside. And what has price done? Price has now repeated the same thing. Yes, the red candlestick has not closed. I agree. It is too early to count our chickens. We only take this into consideration on the 1st of July when this red candlestick is closed. But right now, as a market speculator, it is almost safe to say, if a wick was to form, and it hasn't even formed, we should anticipate further downside, or at least the forming of a strong bearish engulfing pattern. Now, historically, what happens when you get bearish engulfing patterns on the chart? Well, you get a couple of months to retest them. Look at those 2 months there. Bearish engulfing pattern, bullish engulfing pattern, bearish engulfing pattern. Another 2 green months to retest it. And we see here, this one was not retested. Okay, that's what a lot of indicators and algorithms are picking up. That's where a lot of traders are getting this long, right? They believe that the market still need to make good on this area. But you need to take the trading step by step. You just trade what you see, you trade what you see. Now, what you see is a continuous downward trend, number one. Number two, in my humble opinion, we have not yet made contact with the demand. If we haven't made contact with the governing demand, then there is no reason for us to start buying. Okay, that's where we are on the govern, on the mayoral time frame. Taking a little bit of time today, I apologize. Right, mayoral time frame. We can see on the weekly time frame where the strong, literally just like wreckage of selling, and then we're 2 weeks of pulling off complicated 365 candles. We know what those are. That means you've taken the course, and then now we are in a weight game on the weekly time frame, right? When you guys do my module 3, you're gonna see I'm gonna give you what's called scorecards. Scorecards keep everything nice and neat. Scorecards help you think objectively, right? The score for the weekly time frame here is there's nothing you can do. You don't have a supply yet. Remember, on the governing time frame, the red candle hasn't closed, and it makes sense. On the weekly time frame, it makes sense why we don't have a full supply yet. Markets are still printing, right, the orders here, right? So there's an area of interest, not an area of value. Area of interest, look out, mark. Area of value, trade, execute. Right, and now area of interest on the weekly time frame, we have the possibility that one day we're going to get a supply. We don't really, we're not even looking at the fact that there's a demand here. Although most indicators would call this a bottom. Most indicators would be looking for a double bottom. Most traders who are long are looking at that type of thing, right? When I see this thing, I don't see it yet. I don't see the need to buy yet. When I go down to the daily time frame, I will note that even if I find the supply on daily, it's a risky supply. There's no confluence, all right? There's no confluence, and it's there, all right? So now let's tighten our areas of value. Now that we know that there's nothing on the governor, nothing on the weekly, but there's something on the daily, let's have a deeper, closer look at it. The thing on the daily would be something like this, a very big imbalance, break of market structure, but then we can't ignore the fact that markets also came back and popped it open, right? So we've got a broken supply, and now markets are sitting on a valid demand, right? So I would not be surprised then that the 76% people who are long might be looking at taking action on this chart, H4, daily, etc., right? So trying to take a play for this demand and probably holding price all the way up there on the daily time frame, which, by the way, would make sense right now, all right? I mean, given the fact that we don't have confluence on the weekly, we don't have confluency on the governing time frame, right? That this is something that potentially could happen. Now, a thing that can give us some type of comfort, again, is usual anti-Fibonacci. From the last swing high to the next swing low, look at this, look at that. Have a look at where the golden ratio is and the 50% support and resistance line for retail traders. That's going to help a lot, right? So my golden ratio is somewhere here. My kill zone is a little bit higher, and my 50% is lower, somewhere there. I'm going to go to the daily time frame and see what we have. Right, golden ratio, we've got a demand, a supply, sorry, nothing at the 50% mark. Right, there might be an H4 supply, it doesn't matter. Why? When I sell hard. So this is something to bear in mind, right? NZD might go long this week. NZD might go long. This is sick. Remember, if NZD is brave enough to even bother going long, just be ready, because it means the DXY weekly supply will hold. I wish you guys were in front of me, because when I lectured Rose University, like the class is in front of me, I can literally see everyone's eyes, the confusion. But when you're doing stuff on YouTube, you don't know. I mean, you don't know. People are just confused quietly or get it quietly. I don't know. There's the DXY supply on the weekly time frame, and I say to you, be careful, because the dollar has already arrived at the supply. If it doesn't hold and it breaks, we know that the dollar wants to go to a governing supply, a higher supply. But if it gets slowed down right now, dead set here on the weekly supply, then of course, what we just saw in NZD might make sense. The daily might start to run on NZDUSD to the upside as this starts to take the blow, absorb the selling pressure. Why I don't like this yet is because structure is suggesting that this week, on the week of the FOMC, talking to the world, increasing interest rates, and planning out the macro, policy, monetary policy to be exact of the country of the United States, which is AKA global market, that the dollar would fall, right? It's not like CPI or small NFP data. It's actually very, very much of a big deal, right? So this would be very surprising to see this happen. Maybe we get a retracement for the next 3 days. Maybe as the dollar drops Monday, Tuesday, Wednesday afternoon, NZDUSD will try and make its way up as quickly as possible. But when FOMC starts to talk, I'm assuming there might be a recovery. Unless if structure is trying to say, Leroy, you're not ready. Powell's going to surprise everybody and give us a 25 basis point. I mean, that's very unlikely. But right now, the structure doesn't make sense. The DXY structure is supply, sell, we might get a sell. NZD and these weaker pairs, at least on the daily time frame, are getting ready for a boot up, right? A little buy pressure. It's taking out this daily supply, coming back to retest a fresh demand. This could be a very big high risk play, but it could be well worth it, right? So NZDUSD, just know that somewhere in here is a play for a buy. Let's go into the H4 time frame. Go very carefully. Is literally my word of advice. Be very careful. I just did that there to mark out supply. All right, there's just a lot of things weird about this chart, man. A lot of things weird about this chart, right? Head and shoulder pattern. There's just a lot of things going on. So as I said, yeah, this was a beautiful drop into an area of value. Markets now approaching an H4 demand somewhere there, right? This could be the trade to play on Monday. But remember, it's risky, right? It's very risky. But this is it. This is what NZD daily H4 is telling us, right? So I'll look into that. Good luck. Probably going to get either make a little bit of money or going to get some stop loss hits. Honestly speaking, I found this interesting. So I thought we bring to the wall. I don't know, because it doesn't make sense to me yet that NZD strength might be returning at the expense of the dollar during the week of power, right? But stuff to look for. And higher volatile wicks, if you're new in trading, it's one of those best weeks to stay away. Right, 58% along on NZD Swiss franc. That's the next chart we're looking at. 58% are long. It's the last time I'm showing you guys the stuff. As long as you see that I didn't like randomly thumb suck the stuff, right? It's somewhere here. In the event you want to come here yourself later on and use it, I'm just showing you how I'm looking at this thing. We're looking for NZD Swiss franc as quickly as possible. There we go. NZD Swiss franc, 58% along, 42% are short. It's a very balanced thing. And I don't even know if these guys care about it. You know, they're very picky about what they want to trade here. NZD Swiss franc. Right, it's also mixed. Whenever it's mixed, they always recommend don't trade that pair. Can go either side. Excuse me. Right, so mixed contouring indicator, blah blah blah. Right, so we'll leave it at that. Right, so I'm done doing this kind of like back and forth with you guys because it's just slowing us down, or slowing me down, and then the video is going to be too long, and I'm just worried about, you know, everyone's retention. Right, but so I'll just tell you, you're just going to trust that I took it from there. You can go back, check it yourself later on. All right, so we've got 58%, which is the majority of traders who are trading this asset right now are currently long. Let's see if they're right. Right, so we've got long on NZDUSD. We're now also seeing some long calls on NZD Swiss franc. I'm going to find a clean chart because my bias is already mapped out here, and I actually want to have a fresh look, if that's okay with everybody. That's what the fresh look looks like, right? So, okay, this is nice. It's a much more cleaner, simpler chart. I think I was doing some supply and demand curves on this chart, right? So let's just quickly pop in some obvious breaks here, right? Not the cleanest structure, but there it is, a very structure from about 2015 to 2020 COVID. Broken, right? Broken, tested, looks like a fake out. We are on a governing time frame, so you know these things do take time, right? Potential, you know, demand looking down there. Looking at that March 2020 when markets were recovering, risky assets, you know, move this up, then start to tighten the drawing just a little bit as quickly as possible. Right, I'm just gonna do without this trend line. It's just a nuisance, but you can see what it's trying to communicate. Right, now let's throw some S&D levels. I'm gonna go Akini Hashi, cut out the noise. Right, so you can see here, first one, supply broken. So there's strong momentum after that COVID rally, right? So that's not even gonna be the one I would look at. And the next one was somewhere here. very good imbalance, and that's where price went up to, made contact, and market started to fall. Next imbalance on the governing time frame is somewhere right there as well. Price made contact one time, rallied back in, and there you go. Right, so I'm going to throw in some normal candlesticks now. I'm just doing module 1 basic stuff, guys. Module 1 basic stuff. If you've done the course, link down below. If you haven't, by the way, we're introducing payment plans to make it affordable, so check out the new link down below. And the discounts are done, but the payment plans, give you that discount vibe as well. But yeah, I held on for as long as I could. I did say we're gonna have to stop taking people in at discount because we are launching now, right? So that's it. There will be no marketing sales pitch. You join us when you want to, when you're ready to learn, you will come, right? The teacher appears when the student is ready. That's an old Chinese proverb, by the way. Right, so we've got a lot of things going on here, right? We use this on Akini Hashi. You can see there's a golfing pattern right there. Markets make contact, markets drop, markets create a new one here, markets drop, markets make contact, markets are dropping. I don't see a demand on NZD Swiss franc, personally. I don't see a reason to buy anything right there from a governing perspective. So even if there's a green candle this month or next month or the other month or blah, 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 I am left to believe that markets might have to hit this low. But if I look carefully, and I'm just scrolling to the left now, I notice that there is a demand here at the top. One of these demands could be stuck on the other side of that broken structure trend line, right? It's important to check that again later on, even though that trend line was not coming across it, right? So you can see markets make contact, markets create a supply, markets leave a demand. Why is this important? You always need to know who's in charge, right? If you've done my module 1, you know that even though we're looking at immediate supply, immediate demand of government, I want to know who is in charge. Who is in charge creates the trend, creates the flow of money, right? So markets leave a demand and make contact with the supply. Supply is in charge. It was the last thing that was made contact to. The direction of prices down right now. So this could just be a 365 candle. It could just be a PCP pattern. And very soon next month, we'll see a continuation to the downside. So the 58% traders who are long, I am not with them. I'm not with them. I don't get it. Maybe in the short term, that's fine. But in the long term, I'm definitely not with them. Right. On the weekly time frame, got a lot of doji candles showing some signs of rejection, right? Some signs of they want to go up, some upliftment, and that's exactly what's going to happen. If you draw Fibonacci from the downside to the upside to the highest point, right, you're drawing a bullish Fibonacci. You're looking for basic explanations. There you go, golden ratio. The buyers managed to push price up, and then the buyers managed to get price at a 61.8% discount, and now the buyers want to buy it in a bargain and push it up again. That's all that's going on here on the weekly time frame. Keep it clean, keep it simple. Right, I'm going to go Akini Hashi for noise. I just want to see if there's any printed volume of a supply, and there's none. Right, so we're looking at pricing even going all the way up here. Right, so even though I'm not really optimistic about a bull run on NZD Swiss franc, markets might need to make contact with that supply, which is short term to the upside, long term to the downside. All right, and that's just kind of like how I see it. All right, that makes a little bit of sense. And on the daily time frame, this is what we have. Give me a second, guys. Give me a second, guys. Ooh, ugly, very choppy. Look at these wicks. You'd never survive these. You'd never. And it's because of Swiss franc. You know, Swiss franc is always the devil in here. You would never survive these. Your smaller time frames, you'd constantly be getting stopped out. You would constantly be getting stopped out. Unless you've got a nice wide frame. Right. So we've got this type of situation on the daily time frame. This is the only demand that exists, and it's very backed up right now. You can see markets have sat on it, tested it, left, and then come back for it. And if you draw it appropriately with the area of competition, then you can see that no one has really left the demand since 30 May. And today is the 12th of June, right? So I don't trust any of these buys, but there are not that many valid supplies on the way up as well. right? So anything goes, but when it comes to buying, I'm not a buyer on this pair. When it comes to selling, I can't even begin to point you to the direction of a good place to start selling, right? Let's see if I can find one. Right, nothing, right? I'm gonna draw a bearish Fibonacci now. So that means from top down to bottom. And this puts it somewhere here. So this could be a better place to wait. Okay, that's NZDUSD, folks. I hope that makes sense to you. I am not that excited about the pair, but if you are to buy, good luck. I don't think it's safe to buy, and then selling, any of these levels will be a good place to start trying to sell. NZDCAD next. Good trade so far. NZDCAD, very good trade so far. Let's go to the governor, just remind ourselves of what we have. I want to ring the kitchen intercom and ask for more juice. But I think my partner is far away. She's probably in the bed. Sorry, TMI. TMI. Right. So I am looking at an asset that is falling, right? Not the prettiest levels across the board. We're gonna go a key hash to see if we can cancel the noise. We want to see if we can find some type of standing. Alvin at 3:35 just wrote check out Bitcoin, and that's literally the time I'm filming this right now. Let's see. Yeah, and I think I've kind of like already alluded to what's going on in this video about Bitcoin, but we'll come back. I'm just reading the private Telegram and the public Telegram chat as I do these videos for you guys. Yeah. Nah, it's done, buddy. Yesterday I readjusted my lines on Bitcoin, but we'll look at Bitcoin in the war room soon. Today, let me just continue what I was doing. Sorry, I just saw your message. You're gonna see this during the war room, but I'll explain what I'm thinking here. I really need this thing to go down, a little bit more. I really need more market capitulation. Those who give up now, get out now. Those who are not committed, those who don't have a good long-term thesis, move out of the way, because there's just a lot of money circling on stupid projects, right? So we kind of like rebuild the assets, right? 82% of traders on that community are long on NZDCAD. 82%, right? That's a big number. Let's see if that number is convincing. So far, you guys, I hope you appreciate what I'm trying to do. I'm trying to show you that, you don't always go with the majority, all right? Go with the analysis, right? If you don't know the analysis, that's where you should start, do the work, right? So you can see already, favorite bull signals, right? Double bottoms, which I think are a pile of hot crap, are forming here. And then what you're going to get is a retracement. I'm going to talk about a W pattern, all that kind of stuff. It can work every now and again, but there's no consistent way of making a living in the markets. Right? I guarantee that. Right. So NZDCAD, we were trying to cut out the noise before I got distracted by the Bitcoin message there that Alvin put out at the time is 15:35 when we put this out. This is a pre-recording of today's forum. I won't be with you live, but I'll be checking the chat. So chat to me. I will be kind of like acting like I'm listening to family talk, but I'll be, with you. Right. So, this demand area here has clearly been taken out. This is currently being tested. All right. So it's really not a nice thing to trade, right? Well, when everything's just clustered like that, I generally don't enjoy trading that kind of stuff. But for the most part, it is clear that since about December 2020, right, this thing has been on a downburn, right? So, of course, market participants on this asset might be looking for relief. Of course, they might think it's not time to start buying it up, but you need to validate your buy. Where's the demand? What are you buying? Where are you buying from? Just like NZDUSD, no real demand on the charts, but we have the potential, right? We're obviously in these trades from the previous forums, all right? NZDCAD, right? But in here, even on the weekly time frame, we started to see, right, a governing supply 2 weeks ago. You can see it's cleanly marked up, right? We've got a golden ratio all the way up there, right? Which is why a lot of people might want to go long to test it. But I'm simply saying, don't rush to go long to test that golden ratio there so that you can come back down saying you're going to sell high. This is absolutely correct. You must sell high, but don't ignore structure in front of you. Before you can even get there, you need to break this supply. This is the supply you need to break, right? First, because that supply is valid. It's on a weekly time frame, so it could have enough juice to put you down. So be mindful of that. And this is what that supply looks like on the daily, right? We spoke about this high risk golden ratio area. It was only a high risk because there was a better supply above. We spoke about it in the previous forum. And if you don't believe me, I can tell you which one. I have all my notes here. NZDCAD War Room 68. Go back to War Room 68. It is one of the first, it's the first asset that we did together 2 war rooms ago. That's when I got triggered in. NZDCAD War Room 68, 22 May on Sunday. I gave this to you a few days after that. We got triggered in this thing. And now what people call a double bottom at 365, we don't see it like that, because guess what? If this was a daily demand, it's in trouble. It's very much in trouble, right? If this was the low, because you can see for yourself, this bullish engulfing pattern is already iced. It's already broken, right? So we're really hoping that this was the bottom day. And it also means markets dug very deep into it. And then we have to deal with the fact that markets then are going to have to make contact with a new daily supply, which, by the way, on Friday, looked like markets made contact with the area of competition. You can see with the structure of the candlesticks, some selling power drove price down. Yes, on Monday, this week could be filled with price coming back up. But for now, I'm not really all based bias on anything other than what we have, right? In terms of new trade ideas, right now, we're going to have to maintain the course, all right? It depends on when you entered, right? What kind of a war room, participant trader are you? If you only join me on this pair here, then definitely start considering taking profits, or you should have been out already. But if you've been selling since up there, then you know that we broke even on our final sell trade up there, and we're waiting for a retest on the golden ratio, or a retest, sorry, into the sell and on this fresh touch area, which means we're going to need price to eventually break through this area, make it up here, and then we can start to sell again. And so that will be you joining retail traders and going long. It's just that it's very risky, so I won't be with you. Remember, I never go long when my governor is selling, because you don't know how long the long will last. You might have a target point, but price could just go long up to there. It's gone long. Go up long up to there. It's gone long, right? And then follow the greater trend, right? Counter trending is all about timing, and you really don't want to time the markets, in my humble opinion, right? So that's NZDCAD. Sorry, there's not much of a new signal to give, but that's good information, in my humble opinion. Pound CAD. 87% of traders are long from that place that we went to. 87% of traders are long. Let's find out why. Right, so a couple of hours back, I already put this X up for you guys, and I told you guys, look, man, I don't trust this 1, 2, 3, 4, 5. I don't trust it at all. That's just me. I don't trust it. I don't trust it. I don't trust it. They can go long for all day, as much as they want. And if they do go long, I'm very happy for them. I will be looking for a very good place to sell. So I'm giving this setup right now. Please, plan accordingly. Note it down. But there is nothing convincing here about a long, right? This area of value has really sustained and done its job, ladies and gentlemen. It's really done its job. You can see that markets now are sinking a bit deeper compared to all these times where it was just wicks, just making slight contact with that area of value. The buying power is almost done. On the weekly time frame, you've got already, when shocks are already circulating, swimming around you, right? This is what it looks like. Already got a weekly supply position, right? So this would be WS1, because it's the first one, and this is 2, right? So that's why this is 2. And this is 1. That one up here is supposed to be 3. All right, so we won't get into the technicals right now. I'm simply saying there's a lot of sell side pressure. You can't sell right now. However, do not sell right now, because you never sell when markets are inside a demand. You need price to break this demand and then rotate to your supply, and then you can sell going down there. That's the play, that's the plan. If the first supply doesn't work, then we're gonna have to kind of like come back and then look at a higher supply. But right now, in terms of immediate trades, you know, that's one of them. That's literally one of them. So I just wanna quickly clean up the chart so that we can see what it looks like on the daily time frame. Right, there we go. So somewhere in here, I'm just gonna make this red. It's already red, right? So maybe let's not confuse previous work. I'm just gonna draw a line here and say somewhere there by the yellow. This is what that looks like on the daily. Perfect. Right, so that's kind of like already happened though. Well, I don't remember the swing. Am I in the swing? I don't remember being in pound CAD. I could be wrong. I could be in it and I've just forgotten. Right, or rather, I marked out a cowboy area because I see it's in red, and I just didn't take it. I don't like taking cowboy areas. But if you took it, good on you, because this is good money. If I can't remember it, then I'm definitely not in it. You know, normally I could be wrong, but this is like 459 pips. Well done to whoever took this. You know, cowboy risk-friendly area. You know, clean break of market structures. You can see for yourself down here, etc., etc. And in here now, we now have the confirmation of a weekly bearish engulfing pattern, right? So this area of value is actually now quite solid. It's now, you know, been confirmed to be quite a strong supply. It was a weak area, okay, but now it's actually quite an important place. One of the very first defenses of price. If price was to come back up, price has to deal with this whole thing. But that's within the daily. Now, when you look at the weekly structure, we have to draw a whole new area of value because the weekly structure is fresh. Just to bring that to everyone's attention, right? While we're trying to sell a cowboy area, they put orders and bandage this area of value. All right, this is what I've just drawn right now. I'm just gonna make it very tight and then do this, right? So this is now a very important area of value in the market. Why on earth did I make it this big? Man, there we go. Let's do that. Right, so, and that's the daily within the weekly, right? So this is the big climb, right? So I would be mindful of a couple of things. So say if there's a BOS somewhere down there, we can see with a bullish engulfing pattern, but you can see there's a complete exhaustion of all those buyers and market barely responding to the upside. But we would be very lucky, you know, to see this. Right, so you know, you could try and sell there again. I don't like the fact that markets have been here a couple of times. It's very, you know, not that desirable. The better sell place somewhere up there, but you're gonna have to first break this area before that happens, right? So risk appropriately, it's all about probabilities, not about magic accuracy, right? Small trade lot size here, very high risk area. Markets have been here too many times, and then look, what would be very nice is if this happened, by the way. If this first happens, taking out the demand, then what talking? Oh, then what talking, right? You know, and if this supply breaks, then you simply wait for a higher supply. But this is gonna be very good to the downside, you know, over time. All right, that's pound CAD done and dusted. The next one is Euro AUD. War room, guys, come to the war rooms. All right, Euro AUD, by the way, we did this last week Sunday. All right, so according to my notes, I'm just letting you know a couple of things. One, 73% of traders are long on this particular thing, right? We got triggered literally end of this week. I'm not that excited about this trade. And the reason why was on the public Telegram group, if you remember this week, I don't forget the things I write, folks. I'm quite, you know, methodological, you know, spreadsheets, notebooks, everywhere. I write everything down, everywhere. Constantly, here's another one. I like the purple ones, right? It's just my thing. I'm constantly trying to make sure I keep track of myself. But this week on the 365 public Telegram group, and the link is somewhere in the description. I'm just quickly looking for it. If I don't find it, I'll move on. Yeah, man, I'm not crazy, bro. I'm not crazy. So let me share the screen there. I told you guys what I said last week Sunday, and I said, look, man, I'm gonna change my mind a little bit. So let's first look at the chart. So last week Sunday, War Room 70 with Euro AUD. I said, look, it seems to me that we're starting to see some ups, some higher highs, blah blah blah. So just be very careful. If you didn't sell the first time here with me, where I wrote sold, and you should be taking some profits, because if we get down here, markets are probably going to start blowing up, right? That's what I said. And you can see a lot of people also were thinking the same, 73% long. Then I had another look at it. On Monday. Monday, I redo my own analysis, the stuff I'm doing here on the war rooms. What am I doing, man? I had another look at it, and I looked at the governor, and I was like, Governor, what are you trying to tell me? Right, what's going on with you? And for sure, let's find another chart that's got less. Let's work on it so you can see what I'm seeing. So you learn to see what I'm seeing. If you're interested enough to see what I'm seeing, right? And I was like, man, you see, even this one is marked up. I use Saxo for teaching, so maybe I was teaching someone. I don't want to remove the notes there, right? So there it is, right? This is not even a good representation of the charts. Because look at this. There's not enough data. There's not enough data. Pepperstone. Let's see what Pepperstone looks like. Right. Thank you, Pepperstone. Beautiful. Lots of information. Love it. Right. So I really wanted to get it right. Why was I so bullish the 1 week, and then all of a sudden forced to kind of like take that back, right? And so if you draw the area of competition here on Euro AUD, you're correct. I was correct to assume going up, because we are going up. Technically, we have literally made contact with the demand, therefore we are going up. And you can see for the last 2 months we've been going up. What I don't want us to think is how far we're going to go. You can see here, simple tennis, guys. Supply and demand is so simple. Like once you learn areas of value, the rules, some people just do war, they think they can trade, right? But there are many rules behind what we do, right? This is just an intro to our strategy, all right? There are rules to areas of value. There are 8 types of supplies and demands that you need to master. This is minus module 3, by the way, right? So the trajectory to the upside is very strong, and I don't want to take everything back that I said last Sunday in War Room 70. The trajectory to the upside is very strong. Honestly, be aware though that it's about to come to an end, right? We're about 2 candlesticks or 1 candlestick in 1 week away from this thing just turning to the downside, right? So I do note a lot of weakness in this particular asset. The other thing that I didn't like about it all was this. If I use this point to that point and I start to spread, right? That look, at the end of the day, it doesn't really matter how price what feels. We are already in dangerous bearish territory. We are already leaning towards falling. All right. This is what I wanted to correct on Monday on my public Telegram. My public Telegram group is where I do a lot of free teaching, right? But it's based on my time. I can disappear for a week. I can come back. It's truly based on my time. But here it is there, my Euro AUD, trade update, changing my mind with Euro USD, swing trade signals, given in War Room 70. I caution that our sales might run into trouble as the bull starts, because we hit that demand. Remember, I was talking about hitting that demand earlier on, right? And I say, I still stand by that, right? And I just say that right now, so be very careful. But I am short biased on Euro AUD. So even if the demand is being pushed up, I still retain a short bias on this particular chart. That is, overall, this is to me looks like a very weak chart. It does. You can see, guys, well, I've taught you what happens when markets cross over to the other side of a perfectly drawn trend line in conjunction with supply and demand levels, breaking levels. It's always the same story. So I broke it down here: Euro monthly, long-term downtrend. This weekly circle, blah 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 blah, and I put the charts in. So you can just quickly go back, and read this for yourself on the public Telegram group. This is on Euro AUD, and then you'll see that it kind of like matches the same analysis that I'm giving you right now. Euro AUD is at a bus stop, not at a destination. It's at a bus stop, not at a destination. It's at a bus stop, not at a destination. This demand here is a break. It's a bus stop. It's not a destination. Any demand on the other side of the trend line, I don't trust. So for me personally, I have to do this type of walkthrough so no one is confused. right? I'm explaining why my bias is leaning towards the sell side, right? So if you look at that monthly, weekly, and then we come to the daily time frame, you'll see that one of our first sales did well. Our second sale that we spoke about on Sunday last week is also doing well. I did say, look, it might be cut short, and only time will tell, right? So if we start to see a push against this supply here, and most likely a break into it, then we can then agree to start hunting later on for better supplies. There's an H4 supply here. This was the random H4 supply just above. So if you find some daily sells here, make sure your stop loss is above this yellow area, right? But if this area fails, I would have to stop selling completely and wait for price to get up here. Up here is where the trend line intersects with the weekly supply. Bearing in mind that 73% of our fellow traders are long. They are very long on this thing, right? And then in case you don't hear from me on this pair this week, or this week goes crazy, on the H4 time frame, what I would love to see is something like this goes. Now, if markets breach below the close or the wick of this green candlestick like that, I will then be taking my stop loss of this whole zone here and then break it. All right. But remember, price is allowed to drive into this H4 supply. If you do your multiple time frame analysis, you'll realize that we have no choice but to hold it negative a little bit up until price proves to us that it doesn't want to sell, because market is allowed to go up. There's a fresh, beautiful supply nested inside the daily supply. For someone with a small account, that's the trade you should be waiting for, because the smaller the area of value, the better you can leverage your lot sizing while maintaining risk management, right? Cool. So Euro AUD done and dusted. Euro NZD. Euro NZD. Let's go to the governing chart real quick, refresh our minds. Right, so clean touch, it seems, to some type of, like I said, it's marked in red because it's not really a governing demand here at all. I mean, it's there, but it's a weaker imbalance, so it's all red for me. I don't really believe in it. And now markets have arrived at a potential area of value where selling is going to continue. If Euro sells, right, and NZD, means NZD gains a little bit of strength and continues to go up, and that's what NZDUSD was suggesting, wants to go up. And then we had NZD and Swiss franc also suggests that it wants to go up. So now you've got Euro NZD suggests that Euro wants to go down against the Kiwi dollar. I found this interesting, by the way. That's why I wanted to have another look at these NZD pairs with you, right? We had some stop loss hits, or rather supply break, and I think we spoke about NZD on literally straight after Euro AUD on the public Telegram group. And that's another thing why you should join the public Telegram group, because I can say stuff today here, but when they're weekly, daily, market developments, I'll always update the public group first, right? So there you go. You can see Euro NZD. I think someone asked me what's going on, and then I started to address Euro NZD. I dropped some charts for you. Governor is a mess. I did check Q3. Okay, I said now maybe there was a joke in there, and I laid it out, right? So there's a lot going on this chart here, and every time we get a supply break or a demand break, we have to take a break, step back, and have another look at the charts and figure out what they want to do, right? So there was no supply on the weekly time frame. Number one, the only supply that actually got broken was a daily. So there's a daily supply, yes, nested in a governor, but with no previous to the weekly. Right, so markets broke it before dropping, gave a couple of days to drop, and the tick here was literally way before all of this breaking stuff happened. So I'm going to delete that right now. Right, so for me, supply has been removed. This supply has been taken out completely. There's probably a supply on H4, H1 that markets rallied all the way up to. We actually the stop loss. Actually lost money on this trade. NZD, I'm pretty sure I did. I'm pretty sure I did. Just give me 2 seconds, I'll find it. Euro, yeah, definitely. There was a little bit of money, a little bit of a ting-a-ling there on Euro NZD, and it was the stop loss here, right? So market still went down, but without me, after pushing me out. And I think I spoke about it, right? Just double check your H4 time frames. There's a small supply just above the daily. That's going to be the liquidity rate, right? So it's a trap, supply and demand trap. I fell for it. I didn't bother to check the H4, and I was part of I was chowed. Right now, the question is this a supply now? As markets then created a new supply on Euro NZD? My answer is, even if it is, I mean, I got stopped out, so I'm not really in this market right now, to be honest with you. And I would love to sell up here. I would love to sell up there. I would love to sell up there, right? So I'd like to see this happening and transpire, and we can sell all the way back to the red. That's where my focus is right now, but it'll be very much hinged on markets not wasting too much time down here, right? So there's a daily demand there willing to catch price, and I'm patient enough to allow that to happen. Markets need to fall first a little bit now. They better fake fall now into a demand, pushed all the way up, and then this. Right, this might be a little bit risky to take, but if you want to try and climb it, you can. But definitely, I'll have a nice pending order waiting for me up there on Euro NZD. It'll be a nice big swing to the downside. Right, AUDNZD, which I think is our last, NZD type of pair that I want to look at. Right, AUDNZD. Let's go to the governing time frame. 81% of traders are short on this asset. 81% of traders are trying to sell AUDNZD. Right, markets are finally broken out of some type of pattern, some type of triangle, some type of flag. It just depends who you ask what the hell to call, some type of wedge. It goes on and on and on and on and on, right? But the point is, markets are broken out and heading towards a very danged up supply. In fact, about to get there. So the selling is not that much of a better idea, except for the fact that these are current trades and it's too early to sell, right? Very soon there will be time to sell, but this is not the exact moment. But this asset is headed towards bearish territory. We are not entirely sure if it will be worth it. In the weekly time frame, bullish engulfing pattern, markets are about to retest. And like I said, 81% of the markets are selling. So all they are selling is a retest of a PCP of an upward movement. They just don't know it yet, right? All they are selling is a retest of a PCP of an upward movement, right? On the daily time frame, this is interesting, right? Markets are, coming down as quickly as they can. This is a very real big possibility. Something like that. Right? That's what I'll be looking for. And then somewhere in this yellow zone, you'd have to do a multiple time frame analysis. Don't forget that to find your corresponding immediate daily supply, which to me looks like this peak here. So somewhere here, maybe if you're a buyer, this would be like a take profit for you, which is like really you don't want to be holding any buys across this white line under a governing supply. And then we can start to think about selling, all right? But this is what people are trying to sell right now, the 80-something%. But for the most part, markets will go back up. Markets who are very much allowed, and they've been doing it quite a lot, quite of late. They don't even complete the leg, right? They just simply take the retracement without any warning, right? And if that happens, you're looking at these levels here, 51%. 61.8% of the buyer's retracement. For buying retracements, the Fibonacci draw from bottom to top, not top to bottom. If you're trying to buy, find a buy, right? And this is the only one that's worth it. Apologies for that. All right, somewhere there. And this one here is what we call a watch and see type of situation. You're gonna have to watch and see what's going on here, because I don't think you're gonna get much luck buying it now. All right, it might move though, so don't take my word for it. But I definitely won't be buying there with you That's a guarantee. We're definitely gonna wait for golden ratio, and then also wait for the daily, which is a much more safer, much more lower. In fact, I'll just wait for the daily area of value, right? But just to let you know, markets are allowed to, to flip the script somewhere here and say golden ratio is enough now, and then turn around and go. Right, so that's AUDNZD. Next one, popular, our daily bread, EURUSD. I don't want to give a signal EURUSD. You guys know exactly where we stand with EURUSD. What I want to do with EURUSD is to just quickly freshen you up on scenario analysis. I'm going to go to the H1 time frame and make my point for the last time. I'll remind you that I drew these levels with you guys live on YouTube. I'll also remind you that the video is still there. This is what happened with EURUSD, and it's fascinating. This is NFP the previous week on the 3rd of June, the first Friday. We mapped this up. We literally drew this supply. On that Friday, we were waiting for one more red candle. And I said, if one more red candle forms, just note that we've got an NFP supply here. And that's exactly what happens. NFP came, jobs went positive, dollar went up, NFP came down, NFP, the next day, Monday. And I said, look at the movement between this line, right? This is this vertical line going down is 9 a.m. Thursday and up until the whole day, Thursday morning, blah, 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 Friday, NFP, and then Monday opening here. That's what this line represents. Look at the little movement that happened. But the actual trade started the following week. NFP is always traded the following week by institutions. Right? Now that you have the data, they know how to move money. Now, they're good job numbers. What does it mean? It means drive price down. It means dollar is strong, right? Good NFP means all of this. This is good money. In one whooping day, there was more money, okay, than however was made here on the actual news, right? Very clean. And then we took a buy, sold it up until there. I think I told you guys, scenario analysis, paying attention, blah, blah, blah. Had a beautiful sell all the way. They triggered. We just put pending orders. Literally just moved on, right? Then literally price came all the way down here for a buy on the 7th of June. Went all the way back up there to that NFP, and this sell I didn't take. I didn't take it because my rules tell me 1, 2, stay out, right? But very soon, if you take this sell here, you're going to be in trouble. And it looked like it was working, and I was nervous, and I was angry, and blah, blah, blah. How people making money when my rules told me not to stay. And then I bought down here with the next buy. But then markets went up, popped this supply now, because remember, everything has got a glass effect. And if you don't know what that means, get onto the course. You're delaying your own progress, right? And markets went up, found liquidity, took out stop loss. Everyone was selling that area and then switched. So this is what happened now. CPI data drops on Friday. And I literally put this out here, on the public telegram that USD is going to fall. It's an H4 chart, somewhere all the way down here. I did not anticipate that CPI would shake the market so much, creating such a strong risk off that markets actually tore through my first buys, right? I had about one buy, I had taken, the 50% mark that I draw. I had taken profits there. Buy number 2 was still open, and buy number 2 was on break even, and buy 3 was still, running at risk, and actually got stopped out of buy 3. And markets just kept going and going and going and going, got triggered into this area of value while focused on God knows what, didn't even notice, and got stopped out, right? This was brilliant, right? Like markets really, severing inflation data fear. But my point is, this all happened at a point of an NFP supply. The amount of money here, it makes sense why. I'm trying to tell you this. Why was there liquidity rate here? There was the NFP supply. There was still so much money left here. There was still so much institutional, retail, blah, 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 hedge fund money left there. And all that money was finally taken, whoop, and boom, through the markets. Understand your charts. You will make money, right? So EURUSD in terms of scenario analysis has just been falling non-stop based on Friday's data, based on fear. Look at Nasdaq, it's S&P 500, blah, 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 blah. Look at the strong dollar, blah, blah, blah. and we're finally making it back down. Every now and again, when your scenario analysis fails you or you get stopped out, don't forget to take a step back out of that H1 time frame and go back to daily, weekly, monthly, weekly, daily, what's going on, and then come back and recalibrate, right? Because you can see even on the daily time frame, EURUSD has yet again, you know, and like EURUSD seems like EURUSD wants me to just trade it as a day trader, you know, as a 24-hour hold intraday trader type of situation, because daily demand taken up, because it still won't have, it's refusing to get the type of momentum that we need for it to get to come and sell all the way up here. All right, so that's all I have on EURUSD. You know my trade ideas on EURUSD. I share those all the time religiously. I can show them to you real quick. Someone is here for the first time, then you better subscribe. Hope you subscribe. Right, this is EURUSD. This is the red area. Somewhere here is that NFP level on the daily time frame, on the H1 time frame. Somewhere up here is that cowboy area I spoke about, right, on EURUSD. And I personally, for an ultimate swing trade, would need EURUSD to come all the way up here, and we sell to 60 cents. Like Leroy, 60 cents, really, that's impossible, Leroy. Look at Bitcoin. You told me it was impossible. Look at it now. Look, go see what's impossible. Look at your governing chart in the middle of the month of June on EURUSD. The monthly time frame is not sending out strong signs of bullish momentum. In the monthly time frame, EURUSD is trying to create another bearish engulfing pattern. Well, what happens when we get these? There's another one there. Drop. There's another one there. Drop. Like you seeing this, right? I'm not making this stuff up. Okay, 60 cents. We're gonna get there. A year from now, 2 years from now, money on the table. Maybe not 60 cents, but you get my point. We're gonna get there. We're gonna get to these new lows, these no man islands, or up at the 87 cents mark. Fine, we're gonna get there. Believe me, don't believe me. Believe me, don't believe me. Right? I literally was reading a report this weekend on Saturday of Denmark, the customs borders. I'm trying to track inflation. And Denmark literally believes the UK is now a third world country. Things are changing, man. When you get brilliant minds that are still alive, I'm not talking about myself. One day, I hope to be part of this group 10, 30, 40 years from now. I'm getting better and better every day as a trader. That's why I tell myself that, because I want to be that. But when you get brilliant minds still alive like Ray Dalio, whose all his books map out from 200 years of economic productivity, they tell you that, look, man, it's about to go down. Currencies are about to compete with your money. We're about to see a massive depreciation of currencies. Don't ignore the signs. They're right there. And I can see this stuff starting to play out. It's incredible. Well, in the last decade, I've been preaching about this since 2019. We're there. Before COVID, I said, well, in the last decade, markets are going to crash. I didn't know about COVID. I didn't know we're going to use COVID. I didn't know there's going to be a black oil crisis, that oil was going to go down to the negatives. I just knew that the markets were gearing for a decade crash. In 2022, I didn't know there's going to be inflation. Boom, it's here. Decade crash. This is bigger than 2008. We're talking Great Depression, the 1930s, and that's all I've been studying of late. I've been reading a cool book. Where is it? It's in my actual office, my other home office. Anti-Fragile. Rereading that book again. It's a brilliant read. You need to get a hold of that. Things that are poorly built fall. And that's the argument of the book. And when you think about myself and Revlon, the Russell 2000, all these indices that we keep saying, all these stocks that we keep tearing down, right? The things that are poorly built fall. Why was I big on selling Zoom during COVID? Instead of buying Zoom, since Zoom was big on COVID, was because Zoom wasn't a big company because it was a big company. Zoom was a big company because it was a health crisis that navigated customers to Zoom. It was not ready to justify those type of stock prices that it was calling. Poorly built things fall. I'm telling you, try being in a relationship for 6 years with no communication. You're going to get a divorce. Poorly built things fall. Right, Bitcoin is the next chart here. Oh, and by the way, I don't know if I told you this because I just went into Leroy mode. It's not even written here. I see. Let me go to the day time frame. But I'll tell you right now, according to that website that I showed you, 80% of retail traders are long on the euro USD. 80%, right? Are long on euro. So for that to work, again, you need that dollar weekly supply to drop. Right. Bitcoin is the next chart. BTC. Alvin, like I said, I saw your message while I was reporting this. Man, check Bitcoin now. So this is what I did yesterday. If I have time on Fridays, I'll line up some charts on Friday night and see if I can start trading crypto Sundays, because Sunday is a big dump and it normally leads to the week, so it's a nice time to sell. So I caught a few H1, H2 sales on Bitcoin and was still holding, right? Somewhere here, very beautiful. Bearish engulfing, all right, yesterday, and then got triggered last night. Then I'm still holding this, and this is just gonna be good money. This is gonna be good money. 75% or 60% or 50% of any money I make selling crypto, I use the profits to buy crypto, buy good projects. So I fund my long-term investments by being smart with my trading. It's a beautiful, once you get all those small things going, and a lot of people try to, It's my war room, I'm gonna take my time, I'm gonna teach this thing quickly. Here's, you wanna get rich, I know you do. Just say yes, I know you do. This is what you need to get right first. Number one, you need to get a trading system going. Something that you can put an M to. Capital M, mustard. You mastered a trade. Not, I know zigzags, I know Elliott waves, I know harmonic symbols, I know my indicators. You gotta stick to one thing. I highly, blood oath recommend supply and demand. I not only recommend supply and demand, I recommend the one that I use and teach. I recommend my academy. All right, supply and demand. So you have to master that. Number two, in your journey of math, and here, guys, I'm talking about module 1 and module 2. I know everybody is biting their fingernails for module 3. There's nothing. Master this first. All right, it's coming. It's here. It's actually there. All right. By the way, quick update. Every time I create a module, I send all my recordings to not a mentor, but to my prof. One of the first people, not first, but one of the first institutional people who birthed me into this life with institutional financial markets, and then connected me to doing 2 years at Allen Gray, right? So I send my work to South African Institution of Financial Markets, okay, number one. And when he has time, he goes through everything. I'm like, man, this is valid, this is cool, am I crazy? I sent him all my data, I showed him all my live trades, the graph, blah, 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 blah. I like getting fact-checked by someone who I consider or hold to a high esteem. All right, it's important. Mentorship is important. I am still being mentored, right? So waiting on him. All right, and unfortunately, module 3 had a lot of videos. So, and he did promise. The last time I bothered him was just before the month of June, and he was already halfway through. All right, so he's moving as fast as he can. He's a very busy person. He doesn't even have to. He is not under any contractual obligation to go through my work for you, and I'm not paying him. He literally does it out of the kindness of his heart when we talk markets together. And so his input is so valuable to me, all right, so that I can deliver the best products to everyone else. But anyways, master, please, module 1, module 2, you got to master your trading system. Whatever, if you're not a 365 trader, whatever your trading system is, I don't want to fight about strategies. Whatever it is, you got to master it. In your journey of mastery, you got to put you in the center. You are the problem. You are the variable. A mastered trading strategy is a rule-based system. Whether it's support or resistance, whether it's this, it doesn't matter. It is a rule-based system. So the only problem is either you don't know what your rules produce. Do you know what your rules produce? You have to back test that. My rules produce anywhere between an 80 to a 95% win rate per cluster. Anytime there's a deviation from that and I drop to 75, 76, I check the rules, I check the setup, and I check me. I am the problem. Me, my distraction, my how busy I am, my lack of being organized, my trading psychology. You gotta work on you, right? And I've got a video I keep promising. I promise for a week now on money psychology, right? I'm gonna do it this week. I promise you, because I realized when I was preparing for module 4, trading psychology, traders' first problem isn't managing their trades and their profits and their losses. trading psychology for a very long time has been poorly taught that way, right? It tries to confine your psychosis to your trading. Trading psychology comes from money psychology, your money life, your money in general. So I want to get a video out on money psychology, right? And then show you how it's linked to your trading psychology. Every single person with a good trading system, every single person with a good trading system should be able to start a trading account with 100 to 200 US dollars using verified rules, back tested, because you know the end goal. You're not doing something new, guys. Well, I'm not here. I don't show up here in front of my desk to do something new in the market. No, ma'am. I don't have time to do new stuff. I like to do what works. So I repeat the process: supply, demand, higher time frame analysis, hold and swing, trade, break even, take profit, 1:3, rinse and repeat, asset after asset, stocks, forex, commodities, futures, asset after asset, rinse and repeat, because I have back tested to know that that's what my rules produce, and it works. It works long and hard. So in my humble opinion, if you master a trading system and you're working on you should be able to take 100 US dollars to 200 US dollars as capital. And because you are using a trading system, which is a rule-based system that has rules, and those rules actually account for something as simple as risk management, right? You should be able to start to grow your account. Doesn't matter how big the account is, 0.01. There will be liars. False prophets will tell you this is a waste of your time. This is a waste of your time if you don't know what you're doing. You want to grow 0.01, by the end of the month, you have doubled your account. I've done this before many times. I built module 3 around this many times. You should have 400 US dollars and many losses along the way within 4 weeks of trade, especially if you're doing scenario analysis, working on 1 hour time frames. EURUSD alone. EURUSD alone gives you a trade every 48 hours. Don't lie. Don't lie to yourself. You can't lie to me. I've got the data. Do not lie to yourself. Look at my EURUSD chart. Go watch the scenario analysis video. Go watch the scenario analysis video again. I'm going to write it here, scenario analysis video. And that was just part 1, by the way. Look at my EURUSD chart. You're guaranteed almost every 48 hours, there was a new area of value created that you could have taken a trade from at 0.01, 10 cents per pip. Every 48 hours, EURUSD, there's a demand. 48 hours, take the demand. There's a supply. 48 hours, there's another demand. 48 hours later, there's a supply, bridging up. Every 48 hours, there was almost always a play. That's 1 asset. Because with 5 assets, you've got about 10 beautiful swing trades running. First trade, entry 1, take profit at the 50% pip mark to equate what you're risking. Take profit 2 is at the opposing area of value on the 1 hour time frame. Take profit 3 does not exist. You break even and you swing it. Rinse and repeat. 5 assets, scenario analysis. You are lying to yourself if you're saying 0.01 does not work. What 0.01 does is it deals with you. You can go to sleep knowing there's $6 on the line. You can go to sleep. You don't have to close profits quickly. It works on you. It calms down the part of your brain that thinks flight or flee. Grab profits. Markets are gonna still. It's just $8, bro. It's just $8. You're just in the red by $8. Wait to see if your strategy plays out. You're only risking $10 on this chart. Wait to see. Maybe it doesn't hit your stop loss and it goes down. Wait, that's why you want to start small. I don't preach the stuff that you want to hear. You are never going to be a millionaire overnight until you fix how you think about money in general and how you think about trading in general. You're never going to become a millionaire if you're operating at a point of basic. If you're not a master, you're never going to be. It is a beautiful reward. Now, the first million is hard. And I'm talking about, let me put this way, the first 100,000 US dollars is hard, which is slightly 1 point something in South African rands. The first 100,000 US dollars in trading is difficult. It takes months, if not years, for a lot of traders to get there. I'm telling you this, point blank straight. I don't care if you don't take the course. I'm not going to sell you a dream. The first 100,000 US dollars is the most difficult, hard-working money. The next one is inevitable. This is what we mean by the process. You become a consistent, profitable trader. There is a becoming. Stick to the rules, man. Like me, like I'm so scared because on my schedule, as soon as the site goes up and module 3 goes up, I have to open my doors to one-on-ones. I want to see some terrible trades, some human mistakes, but I want to see a trader who is focused on fixing that stuff. I don't want you to not run away from one-on-ones to show me. I don't want a perfect trading statement. I want to see all the mistakes. Let's talk about them. Let's give each other that chance. And I want us to compare the trader you were in June, July, and the trader you're going to become in November, December. That is more than enough time to break out of this stuff, to break out of poverty, to break out of bad accounts, guys. Please stay focused on the mark. I don't know how I got here, but I'm wishing you well, all of you. Right, so we're talking about Bitcoin, BTC. And I was saying in Bitcoin, I'm in a small short, not small, yeah, it doesn't matter how big it is. I'm in a trade position, from yesterday, right? And what I liked about this trade position when I looked again now that we know, see, remember, this is literally like stocks. Don't forget, there's a coupling. There's a decoupling, and now it's back, right? And I really wanted price trade. JP Morgan talked about 38K. I think they're going to pump the market up here. I was waiting so bad to sell here. There's an H4 supply here. It means nothing. Markets created their own original turn right there. And then they're like, screw it, let's drop. And they dropped again. Like, the more times they do this, the more they break morale and capitulation. You gotta remember the stuff. Now, the circle here is one I drew yesterday, and that's because I noticed that if you scroll to the left on Bitcoin on the daily time frame, I'm recording the war room, and it's now time for the war room. So I'm just gonna quickly type on the public Telegram group that war room is gonna be delayed. War room delayed. So sorry. Can we link up at 17:30 p.m.? So an hour from now. It was already 4:30, and I've got people potentially waiting. And that's because maybe I'm just preaching too much. Right, so look at this. Look at this daily demand here. You see this daily demand there? It's been taken out. It's gone. I was like, there's no ways I'm letting that go. I'm not gonna play dumb. I'm gonna play dumb, right? So that's a good target for my short right now. The short that I'm in. Anything can happen. Markets can wake up, spook, blah blah blah. But like I said, if Powell comes through and does what I think it's gonna do, then a lot of things are open. This is open. I'm open to a drop to 24, 25. That would be nice, right? Because remember, 24. Did you know when the last time we were here on the 24th? Do you guys know what happened on the 12th of May? This was literally CPI data. Basically, that broke Bitcoin through this whole area back there, or literally coming back to it now, thanks to CPI data. And now we've got FOMC as well, right? So this would be nice. This would be a very big, nice drop. Remember, I love crypto. I love blah, blah, blah. I don't want it to fail. But Bitcoin right now needs to go collect more unfilled orders. If you want $1 million US per coin, we gotta clear the rat at the bottom, right? 365, man. USDZAR, next chart. I tweeted this, then I put on my Instagram, and I was saying Zero Ramaphosa national shutdown, charts are going down, blah, blah, blah. I drew a supply, I drew this. Markets have broken structure, markets shot back up to a supply. My anticipation, this is a very good place for price to start selling USDZAR. In fact, I'm already triggered, and it's not too late for you to join in if you want, but it's high risk, right? Because remember, it doesn't make sense. Dollar is supposed to be strong, so dollar is supposed to be going back up. But right now, I'm already triggered. I think I'm on minus $10 right now. We'll see how this goes on Monday. But if it does fall, I'm hoping it falls there. The real trade idea is to buy. I want to buy USDZAR. I want to buy it all the way there. But since we're already up here, and this was like very nice, perfect, this is a good trade for me to take, right? So USDZAR, just watch it. 54% of those other traders are also short on this position. I like it. I'm taking it. I'm taking a big risk here. But I like it. I like it. I like it a lot. I like it a lot. Right. So just USDs on the daily time frame. I'll spare you. I'll quickly do a sorry guys, I need to download the video. I need to encode it, re-upload it on YouTube. And normally that takes about an hour. So I don't want to delay you guys who are watching this thing at 5:30 p.m. now. Right. On the governing time frame, just to balance some stuff there. This is what it looks like. All right. Markets could push up, and this is literally the trajectory of the dollar. Right. So if the dollar becomes strong, you might not even get a deep retest there. Because look at this on the bullish engulfing pattern, market's very done a retest. So I might not even get my buy, my lower buy, which might also mean my current sell might be a loss. This is what I have here on the weekly. So like I say, it's a very, 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 very not so supported idea, but I'm backing it, right? I'm definitely backing this. And then we'll see if I get a stop loss hit, it's fine. We'll move on with life. But the real trade again is you just want to buy. You want to buy this type of exotics all the way down here. Do I think the rate in South Africa will come in 1:14? No, I don't. It's a big pipe tree, right? This could also happen, by the way, and then continues up, right? So just be mindful of that. So any setting, take profit here because there's a bullish engulfing pattern there, and markets might not make it down there. I'll have both pending orders in play, but I'm just simply saying, markets decide they don't want to drop. If dollar strength comes out of nowhere, for example, Wednesday interest rate, this trade idea is a mess, all right? But because I tweeted it 2 weeks ago, I had to put a pin in order, right? It's terrible to give out trading ideas and never risk your own money. I feel like that's completely unfair. So that's why I'm triggered, right? But I'm not the happiest about this trade idea, right? I'm more happier with the buys than the sells. EURZAR, USDZAR, EURZAR, POUNDZAR, one brain. All right, so one brain. There you go. EURZAR, blah blah blah, and then there's gonna be some buying somewhere here. That'll be like a match buy, and then there'll also be something there, but it doesn't look valid, right? The 96% of traders are short. I'm triggered here too because I'm dumb, But we'll see. We'll see how this goes. EURZAR, we'll see how it goes because remember, if dollar is strong, because of the interest rate rates, euro is going to be weak. So we'll see. So it goes, and then POUNDZAR is the one I'm not into at the moment. Two of my brokers don't have it, and then on AvidTrade I kind of got to set it up. But it also looks a little bit different. This one's much more closer to a demand made context in the supply. So that's why I left this one out. All right. So EURZAR and USDZAR are my trades. And then, ladies and gentlemen, the last chart for today's war room. You guys have been awesome. Thank you so much for tuning in as usual. I appreciate you. Thank you for subscribing. Those of you who have subscribed, you are amazing. The goal for the week or the month of June at least is to get another 100 subscribers so we can get to 500. I would appreciate you helping me in this modest goal. Generally speaking, sharing, putting the word out, that's what I think helps, right? It helps get the algorithm going, etc. Right, this was a beautiful trade, and the devil, once I saw this bearish engulfing pattern, which closed our buys, and that was instinctual, because wow, markets took all those profits back, and this was one of those trades, platinum, where I'd been waiting for a while. I think I got it in December, then got in again. Yeah, there we go, December. Yeah, I remember everything, 14, 15 December. And the markets just took it all back, right? Now, by the way, on the website, geez, you need to see this for yourselves because you're not going to need it. There's not time. 100% of retail traders are long on platinum right now, right? 100% are long, right? So it might mean platinum is now down falling and everybody's waiting for this. This is the first slightly high risk area I'll start to look into. I might put a very light pin in order there. Right, markets creating higher highs. I get that. But let's look at the structure though. I brought it up because I just wanted to see what on earth are they excited about. Why is everyone wanting to buy platinum now all of a sudden? Right, so we bought platinum until it ran into this governing supply and it went back down. Right, so and then this is the demand, but we had 1, 2 touches, potentially a third one. So that's why we don't trust it. There's a bullish engulfing pattern right here as well. It's just a mess, man. I mean, there's not really nothing exciting on the meeting. Sitting on top of a bullish engulfing pattern, markets might be ready to go up, right? So this might be a cool whole situation here where price is ready to go up, but like I said, I'm just gonna wait down here. If I don't get triggered, it's too late, right? So I should have been triggered somewhere here, to be honest with you, on the daily time frame, and somewhere there. So something like this. Maybe it hasn't even happened yet, right? So just bear that in mind on your daily time frame. But the obvious target for now, please be very careful. The obvious target for now is somewhere here, if not here. Be very, very careful. Be very, very careful, right? We're no longer shooting for the moon up until we get what's going on with global demand. Right, guys? That's all I have for you. I've spoken to you guys about a lot of things. Don't forget two announcements this Wednesday on the channel, 8 p.m. South African time. I'll be live looking at FOMC Powell. Tomorrow I'll drop another video on COT data. On Tuesday, I'm going to drop a video on the channel on money psychology and trading psychology. Very important. On Wednesday, I will be live. So you're going to get sick and tired of me. And I'll be active on the public Telegram group. And we'll see how it goes. Shake my hand. I appreciate you. Watched, all the way to the end. I thoroughly appreciate you. And don't mind me doing this with you, because I don't know how many people are doing it and when they are doing it, how frequently they are doing it. And I wish people could do this every single day, because that's how it is built. It is called the law of vibration. If you want a car, yes, you can go work hard and get money, and then go buy the car. That's just how the whole world wants you to believe to do. Actually, to get a car, if you wanted a brand new car, you simply need to align your vibration towards getting that car. And I don't want to get deep into that stuff. And I know some people don't believe or don't even understand it, and that's predominantly fine. My point is, if you're a trader and your goal is to become a profitable trader, apart from following rules, mastering the trading system, working on you, the big part of working on you is working on your subconscious. Your subconscious is what's linked to your trading psychology. You need to have good belief systems about yourself. A good way to do that is to affirm those belief systems like a crazy human being. If you listen to music, watch TV, make sure those things don't take up as much time more than reaffirming yourself. How do you reaffirm yourself? Repeat these words every day, in every way. I'm getting better and better as a trader. Every day in every way, I'm getting better and better as a trader. I'm only going to share with you half my affirmation card. I've once read the whole thing to you, but because of time, I'm going to end it here. And because of that, right, because I'm getting better and better, I am so happy and grateful that money comes to me in increasing frequent quantities on a continuous basis. I believe this is true because it has already happened. Yes, you didn't get the million, but someone gave you $10. Yes, you're not a billionaire, but you're eating something somewhere. Be grateful for what you have. I believe this is true because it has already happened. That's already happened. I am grateful and thankful for everything in my life. And next, money is forever circulating all around me. I'm never in a space of competition. I don't care what other academies are doing, what other traders are doing, what other people are doing. Generally speaking, money is continuously circulating. It's circulating, and there is always a divine surplus. There's always more than enough. I am prospering every day. I am growing in wealth and in wisdom every day. Every day, my wealth is multiplying. My family and I are advancing, growing, and moving forward financially. This is my affirmation for my personal account. I will have 743,500 by the 25th of December 2022, at the end of the year. All right, and you will be surprised how I'm doing on that target. You'll be very surprised, right? Consistency, right? I thought I was behind in the first financial quarter, and I'm now doing quite well. If you think about it, divide the total by 4 financial quarters, divide the 4 quarters by a monthly figure, and you know what you need to be getting at a minimum month. You won't do that if you're not organized, right? So I have a goal and I have a plan to get to the goal. Simple. God is my source of my supply. Why God? If I do God, you can do it. My little brother talks about the universe. You should check out the YouTube channel. Incredible human being. Right. But the point is, I'm not responsible for this. Simple. So I don't have to rely on me. If I don't have to rely on me, I don't have to suffer from doubt, because I can doubt Leroy, because Leroy is a flawed, not so perfect, incredibly silly human being. But if I make God in charge, God is my surplus, then there's no need for me to waste time doubting me. No need to say this is too big of a target. This is crazy. Not my job not my responsibility. God is my source of my supply. All my financial and other needs are met at every moment of time, point, and space, because there's always a divine supply. All right, so as a little bit, I'm happy to share with you. Maybe we can do just one more part of my affirmations, and then we call it a day. All right, we can call it a night or whatever. Right, so let's see if we can make space for it. Let's delete the first part. Right, I'm married to wealth. I'm one with wealth. God is my pilot, leads me, processes me, is my counselor. I am the best and continue to be the best financial markets educator in Africa. If I don't tell myself that every day, I can't show up here for you. I have to believe it. And I believe it because every day, in every way, I keep getting better and better. Better in delivery, better in time allocation for people who need me, better in becoming a resource for people. I'm getting better. I am becoming the best financial markets trader and investor, consistently profitable in the forex market, derivatives market, options market, futures market, stock market, and crypto market. I will get my blah, 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 blah on the 25th of December through trading and all things financial markets related. By 25 December, I'll have in my position, I'm just telling my brain, I keep reaffirming this number, you're going to get it, which will come to me in various amounts. See, that removes the pressure. In various amounts, I break the big number into 4 financial quarters into 12 months. Boom, I've been doing this since January. So I can tell you that in the first financial quarter, I saw I was off target. But now you saw, those of you who've seen my 6-figure withdrawal stats, you can see I'm starting to catch up with my targets now. I'm focused. So the money will come to me, in various amounts from time to time during the interim. In return, Napoleon Hill talks about it in his book, Think and Grow Rich, and in the 17 Laws of Success, and in Selling You, this book as well. He repeats it everywhere actually. And Dr. Murphy from the podcast, Think Yourself Rich, they all talk about the same process. Nothing is for free. I want this, right? So what am I going to do to get it? It's in my affirmations. It's simple. To get this, in return for this money, I will become the most efficient trader, master my trading system. It's a must. I must sacrifice time, effort, and energy to get what I want. The universe is not full. It's in the Bible, it says, do not be deceived. God is not a man that can be fooled. You can't cheat the system. You can't just go lotto, money without putting in work, right? I don't have $743,000 to give. That's what I want to receive. So I'm going to give me. I'm going to become the most efficient trader, the most disciplined, the most rule-based trader, so that I am capable of rendering the fullest possible quantity, the number of trades I need to be taken on a weekly basis, right, to get this money, but the quality, the number of wins, risk-to-reward ratio, perfect clean setups, right? So for me to do that, to get that money, I must be disciplined, rule-based, blah, 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 in my capacity as a trader. I believe that I will have this money in my possession. My faith is so strong. Remember, I no longer have to believe in me. For me, I don't know if you're not a Christian, blah, 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 figure it out for yourself. But for me, God is my pilot, not my problem. My destination is 743,500. My job isn't to find this money or poop it out of my pants. My job, just to be very clear, is to become an efficient trader, to remain the most disciplined rule-based trader, so I'm capable of running those trades, right, in my capacity. So when I say my faith is so strong, it's cool. I can believe in a higher power that created everything according to, my belief system. I can now see that money. So I visualize. Please don't forget this. I don't just read this stuff to myself every day. I sit for 30 minutes in the morning, cold winter, hot summer. In the morning, I'm out for 30 minutes and I'm visualizing 25 December, trading account balance, or withdrawal slips, or all in all, total year gain, 743,500. I visualize me and my partner sitting down talking about what should we do to buy another property. I visualize what to do. I see it happening. 365 Money Heist podcast on Spotify. There is a podcast I started. Go back and listen to those audios. It's all there. All right. I can feel it. It is now awaiting transfer to me at the time and the proportion that I make my trades. So the money is already there. It's waiting for me to be serious. Your money is there. It's waiting for you to be disciplined, rule-based, efficient, learn a good trading system, be efficient at it. Your money is waiting for you. When you become that trader who can render the right amount of trades at the best quality of those trades, you will then see why I write like this. My supply is unlimited. I'm grateful for everything I have. I'm grateful for you guys. Thank you so much. 365, shake my hand. By the way, the podcast I'm referring to, the videos are also on the YouTube channel. Just go through our playlist on the YouTube channel and click 365 Money Heist Podcast and sit through those teachings. Incredible stuff there. Right. You'll know why I am the way I am. Right. Shake my hand one more time. I appreciate you. Good night. Goodbye. See you Monday. See you Tuesday. See you Wednesday. Video after video this week. Peace.